A very good morning. You're watching India Market Open after a week of nothingness and a weekend that was sort of action-packed in lots of ways. On the economy, of course, it was all eyes on China. The finance minister, once again, I think disappointed the street, did not explicitly state measures coming, but I guess riding the market on, indicating that there is going to be a stimulus coming their way soon.
Yeah, I think the couple of notes that came out mentioned that let's wait for October 28th and some moves there. And interestingly, futures, most commodity futures in China have opened on a positive note. So as much as, some of those stocks, I don't know, people thought may come in a pressure. I don't know, it's going to be a different situation.
But he's doing this week on week. He did this on Thursday when there was anticipation of stimulus. Nothing came through. Then Saturday there was disappointment.
But that was a planning commission body. This is a finance ministry. So there are two different bodies who've come out with their plans. And this one was what was really
riding on the bulls.
Riding on the bulls. Yeah.
But, sorry guys, but I was really excited about one more development. I'm sorry, call me an Elon Musk fan. I'm not really. But SpaceX and what they have done, will we see Mars to be a reality at some point of time? It's quite stunning, really.
So many things. SpaceX, the humanoid robot that they have unveiled.
Yeah.
All of those things have been exciting. But I'm just alluding to perhaps what you were saying, Samina. One shocking thing over the weekend in Mumbai, a leader being shot at. Baba Siddiqui, that was really horrific. That was Saturday evening.
A month before Maharashtra election.
A month before Maharashtra election. So all of that also happening in the backdrop as well. So that was a big one. And of course, 3 assailants have now been identified. But let's get to the global stories right now and what the setup looks like. The setup looks good. So that's the first thing to remember. The US saw record close on Friday. Dow jumped over 400 points. You've had a strong session at the end of the week and a stronger than expected Q3 from the banks help. JP Morgan Chase, Wells Fargo, that boosted sentiments. So the setup is looking good. PPI also came in. The Producers Price Index came in flat for September. Remember, CPI was slightly more than expected. That was a disappointment, but this came in flat versus expectations of a 0.1% increase. So positive on that inflation front. As a result, Treasury yields just did dip on that data. The 10-year was at 4.09%. Crude has actually slid off. And if you look at NYMEX, Brent is about $77. But if you look at NYMEX as well, crude prices are sliding off. That's good from an India perspective. NYMEX at 74 right now. But the big one really is what came out of China. So the China Finance Ministry announcements have largely disappointed. They promised a fiscal stimulus, said that they will increase government debt issuances. Subsidies will be offered to support property market. But the problem is that the size of fiscal stimulus has not been announced yet. Asia, however, has opened higher, pushed by those Chinese stimulus plans to some extent. The Hang Seng still feeling that heat, about 2% down. Shanghai, about 0.5% up. But let's look at the rest of Asian markets, please, and the implied Nifty as well before we get into conversation with Matt Orton on how he's seeing these developments. Muted but positive start for the Nifty, about 19 points up. And the rest of Asia looking okay. I think a lot of watch on data which comes out in China. Trade data will be out today as well. All right, Matt Orton is joining us, Head of Advisory Solutions and Market Strategy and Chief Market Strategist at Raymond James Investment Management. Matt, great to speak with you as always. Let's start with China because I think that's the big story that everyone's looking for globally. What did you make of the announcements which came in from their finance ministry over the weekend?
Good morning. Great to see you as always. And it was disappointing. I've long been a little bit skeptical on the Chinese growth story. And I think the news that we got over the weekend is just a little bit of more of the same, which is a lack of clarity. And I think what the market really needs at this point is clarity with respect to how big the fiscal stimulus is going to be. And more importantly, is China willing to run a larger fiscal deficit than what they have traditionally adhered to, which is around a 3% fiscal deficit, in order to dig themselves out of this significant savings consumption imbalance that they have? We're going to need something more on the tune of 5+% of a fiscal deficit, and we're just not getting it. So I think the market's very uncertain what to make of this. And so I think that's why you're seeing a little bit of uncertainty with respect to Chinese equities.
Matt, let's talk about your investments, and I want to start by talking about China. Are your investments in China driven by short-term tactical opportunities based on current market conditions and the stimulus that's expected from the Chinese government, or are your positions a lot more long-term structural in nature, with regard to China's outlook on the economy?
Yeah, that's a really good question. And I squarely put China in trade bucket. China is a short-term trade, whereas markets that I think have long-term, very strong, robust fundamentals with secular growth trends like India, like the United States, those are long-term investments. And so I, number one, remind clients when I talk to them about all of the buzz that's around China is it's okay to trade China, perhaps use options, think of ways that you can get involved without having to take too much risk, because the market's going to be very volatile. But instead, think about also how maybe you can get tangential China exposure. Perhaps global growth enthusiasm can be represented by leaning more into cyclicality, whether that's in the US or minors around the rest of the world. So there's other ways you can get exposure to the optimism around China without having to make a direct bet in the Chinese equity markets, which we've seen over the past week or so, can be incredibly volatile. So it's definitely a trade, not a long-term investment.
Matt, the question there, but though is, have you observed in the recent past any kind of large reallocation moves? And even if that would have happened, because a lot of people are saying that there has not been substantial reallocation, but even if that would have happened, are we coming to the end of that kind of a move, reallocation of money away from other EMs to China?
I think we're coming to the end of that. I think we've seen a substantial trade-off between India and China. I mean, you look at the FII numbers coming out of India over the past 2 weeks, and it's been pretty relentless. But I think foreign investors have gotten a little bit over their skis with respect to China. It's a story of being underweight to China, very, very underweight to emerging markets, more broadly speaking. And as a result of that, they're playing catch up. They're trying to find any areas they can take cash from, reallocate it to another emerging market. But I don't really think those are long-term dollars that are in movement. And I think the fast money nature of the rally we have in China is on display just with how volatile the market has been. So I would expect once this Chinese enthusiasm has kind of lulled, if we don't get the type of fiscal stimulus we're expecting, I would think investors are going to start to put some of that money back to work in those longer term fundamental stories, whether that's India, whether it's moving more cash on the sidelines into some more fairly valued pockets of the US equity markets. I think we're going to start to see that rebalance, especially as we head into the end of the year, and investors are becoming a lot more risk conscious with respect to locking in performance for a very, very good year. Their willingness to take on outsized bets or outsized risk is going to decline. So I'm waiting to start to see signs of that sort of rebalance of fund flows, or at least a cessation of the money moving into China. And I think that's the time to really start to add more money into some of those longer term fundamental plays.
Matt, trying to understand how you were looking at the US elections, just about a little over 3 weeks now left to go for that big decision. It's still neck to neck. I think the latest polls are showing Trump slightly ahead. Are you seeing this as a big impact factor?
It's certainly on the minds of every investor. And I get asked by clients probably every single day at this point, how should I invest? How should I position based on who I think is going to win? And the one reminder I give to them is don't. Just don't try to make those bets. When you go back historically speaking and look at every single bet that should have been a surefire investment based on who we thought was going to win an election or based on what we thought the regulatory agenda was going to be, it rarely, if ever, plays out that way. So instead, what I try and encourage clients to look at are what are some of the bipartisan issues that both of the candidates are talking about. So part of that's tariffs on China. So I think that naturally makes me a little bit more skeptical about some of the enthusiasm around China. But other bipartisan investment ideas is the concept of reshoring, bringing manufacturing back to the US. I think that's a long-term durable theme, the build out of more electric utilities to help support the future of AI, whatever that looks like. So I think those are areas that I feel much more confident putting money to work we're seeing an inflection in the earnings profiles of those companies, and they're still relatively cheap compared to the rest of the S&P 500 and U.S. equity markets. So there's still a ton of opportunities, and you don't need to play the U.S. election in order to get exposure to that.
Matt, let's move focus to India now. And the reason I ask is because you did point out that in view of the recent correction and valuations easing off in the last couple of weeks, you do like some areas in the Indian equity market. So any specific stocks or sectors that you're bullish on? And also give us reasons for why you favor these companies and what factors you believe could drive these counters higher.
Yeah, so India has been my largest overweight outside of the U.S. from a global investment perspective for a long time, and it still remains that case. And I think within India, quality continues to matter. I think investing in quality companies where you can have confidence in their earnings profiles going forward is on display, even with respect to this correction. You've seen some higher quality companies that I like a lot, like ICICI Bank, which has exposure to really just a broad consumer demographic, but also it has exposure to private investments, greenfield financing, as well as a large private wealth management businesses that continues to grow. And it's printing mid to upper teen double-digit EPS growth. So that's a great steady compounder. So when a name like that pulls back, that's a great time to be putting money to work. The pullback we had earlier in the summer in another high-quality grower like M&M, Mahindra & Mahindra, that to me is also an exciting opportunity because you have great long-term secular growth profiles. You don't just have exposure to their auto and farm implements business, which are doing quite well, and the enthusiasm around rocks is really, really exciting. But you also get exposure to the Indian growth infrastructure theme through all of the other Mahindra Group companies through that. So that's another really, really good, I think, long-term investment play. And I think IT services as well is another sign that this pullback in India is certainly viable because you're seeing strength in some of the names that have more exposure to the global economy, whether that be an Infosys, for example. That's also, I think, a signal that this general pullback we're seeing is definitely an opportunity to think about putting money to work into higher quality companies going forward.
Okay, thank you so much for that, Matt. Always great to speak with you. Matt Orton there on looking at India as the long-term investment destination and China as the trade. But having said that, the fund flows still show that the FII selling spree is continuing. Look at Friday and then look at October so far. On Friday, 4,163 crores of outflows from foreign investors. Domestic investors come in with 3,731 crores. And this has really been the pattern. For the month so far, FIIs have sold more than 56,000 crores, 56,446 to be precise. Domestic investors have come in and balanced it out by a margin, 57,792 crores. But the direction is clear and the direction is one way. Quick look at the implied open just before we get to the market recap for Friday as well and how markets had performed in the positive but inching up. I suppose, Samina, this is also going to be a bit of a tight day. Remember, a huge IPO opens up.
Yeah,
so
you might
get ready
see
for that liquidity crunch.
Liquidity squeeze that could happen. But just a very short recap of what happened last week. I'm calling it the week of nothingness. The markets, after a very tough week, ended last week on a very volatile note. We were marginally lower, so there was pulls and pressures, but at every uptick, there was selling pressure that was seen. Traders clearly still seem to believe, or had believed last week, that it was a sell-on rally market. Broader markets did okay, but the Nifty is down about 3.3% so far in October, marking it one of its worst declines since December 2022. Well, lacking momentum and bulls failing to find that momentum is what actually led to a very flat week of trade. Bank Nifty also failed to see follow-on buying after the day of action that was on Thursday, but post that, the Bank Nifty also falling off the hedge. Metals gained about 1% on Friday on hopes of a Chinese stimulus, but for the week they've ended about 1.6% lower. Pharma and auto were your top gainers, gaining about 2% for the week. TCS kicked off the earnings season. Numbers were slightly disappointing. The stock closed out at a 3-month low. Ola was one of your big losers last week, down 9%. 9% and down 20% for the week, for the month, on back of a number of concerns regarding customer complaints and the fact that their sale numbers have also been falling. Well, the recent high of 25,234 still remains a key barrier on the index, and 24,750 is where key support sits on the index. The wicks has cooled off, and I think that was the only ray of hope the bulls held on to last week. In fact, down about 8% in last week's trade. But Niraj, as we go into trade this week, it's going to be an earnings-heavy week. Globally as well, cues will be significant, and I think traders will continue to track Bank Nifty because it's been volatile and it's struggling at higher levels.
Yeah, in fact, so many people believe that now this is the time for the Bank Nifty. I mean, you've heard this enough number of times. Let's see if it happens or not.
Apna time aayega.
वो आता है और चला जाता है.
Apna time aayega featuring Bank Nifty this week.
And maybe HDFC Bank, who knows. But interesting week for
I think we should stop saying HDFC Bank now.
Let's do that. But you know, the problem is that such a narrow band. So if you look at the good part, okay, the positive is that the last 2 days, 24,900 was respected by the index, and that's a level which has seen significant put writing activity. So that level has been respected, with the markets going lower but ending above 24,900. So 500-point range broadly. Last 2 days between 25,000 and 24,900. That narrow, and that's the interesting piece. The question is, for a day trader, if we break below 24,900, does it open up some immediate downsides for a day trader? Remains to be seen. I don't know. I know Hyundai IPO is exciting and stuff like that. It's the first auto company after so many years. But will it really pull out liquidity in a meaningful way out of secondary markets? I think opinion might be divided there. Depends on what quantum of oversubscription also, of course. And keep in mind, it's such a large IPO. We'll talk about it in detail tomorrow, so I'm not going to spend too much time there. But I think a lot of people that happened to meet over the weekend in the smart money or the HNI category mentioned that they believe that it will not pose a significant threat to secondary market liquidity. Wait and watch. And I don't know, I thought in the morning that metals will definitely take a hit post the lack of concrete measures from China. And also because there's a table that we should pull up, which is showing the price movement of the metal stocks in Friday's session. I mean, look at those moves. 4.5% for Nalco, NMDC 3.5%, SAIL, Hindalco, everything rallied. But just because, I mean, the point being that futures have opened slightly higher in China on the base metals, and a lot of them, and therefore don't quite know if it is a naked short. And if you read the notes from Nomura and HSBC Global, and they are saying that we take heart from what China has done, and we are constructive, therefore, on commodities and Chinese equity markets.
Perhaps because the measures that the Chinese Finance Ministry announced, they didn't quantify it.
Yeah, quantum was not
but it is very directed that you're going to help people in the housing sector. You're going to help people who can't afford it. You're going to issue debt for people who can't afford it to boost their payments for housing. So maybe that is a boost for commodities like metals. So it's a direct help to construction. Yeah. And that's possibly you could see a reverse trade on metal.
Yeah, so will the gains get reversed? Remains to be seen, but because the rallies happen, even if you're positive, maybe further longs need not necessarily happen today, at least, because look at the rally on Friday. It was very significant.
Disclaimers for the week. Metals are still down 1.6% despite the buying that was seen in trade on Friday. So while Friday was great, the week itself was not phenomenal in that sense for metal stocks. But talking about aluminium, I think that's probably the one of the best performing commodities on the LME as we see it. It's up nearly 2%. And with regard to Nalco and Hindalco, remember, supply side concerns on alumina has what supported the run up so far on those counters. But it's going to be a busy week. We've already told you what, Niraj, you're done with the trade recap?
Just that, yes. Such a big day for results as well, right, today? Reliance, HCL Tech, Angel One, Sterling Wilson Solar. Some interesting names out there in the mix.
HCL Tech. Just to actually quickly take you through the key events to watch, we've already highlighted for you. Earnings is going to be the big trigger for market participants all through this week. Counters like RIL, Infin, HDFC Bank, amongst many others, will report earnings in the week. You've also got economic data on the radar. CPI and WPI inflation will be released today. Auto sale comes in on the 17th of October for the month of September. Globally, in China, of course, you have all eyes will remain on the monthly inflation, PPI, vehicle sales, and GDP data later on in the week. In the US, retail sales and weekly jobs data becomes critical. On the 17th of October, the ECB will also announce its rate decision, a good possibility that they may continue with another rate cut this time around. You've got 3 new IPOs and 3 new listings from the main board and the SME, the biggest one, of course, being Hyundai, and you've got 1 listing that's lined up for the street tomorrow. So that's, of course, the bunch of events that the street will be tracking very closely this week. Along with that, a few stocks that I have on the radar that we should be tracking. Avenue Supermart numbers were a huge disappointment. The street's not going to like what they saw. Brokerages, while they maintained their buy call on the counter or their hold call on the stock, they've reduced their EPS quite significantly. Revenues were at 14.4%, 14,445 crores versus 12,624 crores. So in line on the revenue front. EBITDA was also up 8%. What has seen a decline is margins have come down at 7.6% versus 8%. And profits were up a mere 5.8%, clocking in at 659 crores versus 623 crores. So disappointing, most estimates from brokerages this morning on Avenue Supermart. So some weakness is what we should be getting. Another one I quickly want to mention is Wipro. This is important because they did announce yesterday to the exchanges that on the 17th of October, when they announced their earnings, they will also be considering the issuance of bonus shares for the company. This is the first bonus issue they're doing since 2019, and amongst its listed Nifty and broader market peers. Now, Wipro is one company that has done the maximum bonus issue to its shareholders. Apart from that, of course, brokerages will watch out for what the commentary is from Wipro in terms of the outlook on revenue and guidance. Another one that catches my eye, because these usually react to order wins, is the Ashok Bilcon. They've received a letter of acceptance from the Maharashtra State Road Development Corporation. It's a significant EPC order to the tune of 2,310 crores. So Ashok Bilcon was up 3% on Friday. Follow-on buying is what's expected. Wipro, remember, has been the best performing IT stock in the last few weeks, maybe in anticipation of this bonus issue, which came in as an announcement of the exchange filings yesterday.
Okay, before I get to my list of stocks, are we calling it Hyundai or Hyundai?
I think I'll go with Hyundai. Hyundai?
Hyundai?
Hyundai? No. Stop being Korean now.
So, it's an interesting debate because even their global management has adapted to what Indians know of this brand because it's been part of our ecosystem for so long.
But what is it called globally?
It's Hyundai. Hyundai.
Okay, you all both need to decide and then tell me.
The advertisements call it Hyundai.
Hyundai.
Indians call it Hyundai.
I like being Indian. We'll go with Hyundai. My version of it.
Okay. Nevertheless, very interesting chat coming up at 9 a.m. on Hyundai and what you should do with that IPO. But let me get to my stocks list. Bajaj Housing Finance. So the 1-month lock-in period ends on October 14th. That is today. 12.6 crore shares, or 2% of the outstanding equity of the company, will become eligible for trading. Lock-in period does not mean that all the shares will be sold in the open market, but you could see some pressure coming in. Remember, it's a listing which has done very well compared to its acquisition price and offer price. So you could see a bout of profit booking coming in. So watch out for Bajaj Housing Finance. Induco Remedies is the other one. This is a thumbs down. Their Goa facility was inspected by the US FDA in July. The facility is classified as an OAI, which is official action indicated. But now, here's the thing. They first received an OAI for the same facility in Feb 2023. The US FDA comes back in July, and they have been still fixing issues. So they come back and they still find at the facility in the OAI category. So the compliance status in that sense has remained unchanged. It's gone from OAI to OAI, but I would still say a thumbs down because there has been no improvement in that sense. Hathway, numbers were out. Profit has jumped 28.7%. Revenue has grown 6%. EBITDA has also increased. Margins have been a bit of a disappointment for Hathway, but nevertheless, on the top line, it's been good, which is why I would say a thumbs up here on Hathway.
Okay, well, those interesting, some numbers, some of those as well. In addition to that, I thought, the one that was disappointing from that group was Network 18. The numbers left a bit to be desired for the longest time. So much talked about it, but didn't quite do anything. But anyways, Network 18 may be a stock that corrects as well. So we'll watch out for that. The 3 stocks on my radar: We're talking of order wins, Ashoka Buildcon and some others. Look at PNC Infratech. That one is an interesting one for the morning today. I think is won an order close to 2,000 crores in addition to Ashoka Buildcon's order. So PNC Infratech is the first one. LOA for a road project worth 2040 crores. So that's the first one. And we've discussed that. Okay. Sorry, the three stocks on my radar, I got completely confused.
So
but my three stocks.
PNC Infratech is interesting. The first time they announced that order win was on the 9th. So that was known. But what they have done over the weekend is that they have re-put out all that information and the order size has actually shrunk minimally. Yeah. So from 2090 crores to 2040 crores. I don't know if that's going to be seen as a negative. If at all, but it's a very small change. Interesting to see.
Yep, most certainly. Okay, the three stocks on my radar. I finally have my list. The first one is Concor. Now, Concor, the numbers came out on Friday, but just some deeper analysis leads one to understand the importance of what they've released in Friday's session. So it's a bit of a problem for Concor, and the reason why it is a problem is because while the Q2 update was to an extent minimal, the ask rate for Concor now in H2 becomes very high, and therefore won't be surprised if there's a bit of a stick that Concor faces in the session today. So do watch out for Concor in trade. JSW Energy is the other interesting one, wherein what they have gotten or what they have bagged is a large order win from Mahagenco, and it's an agreement with MSED for 1500 megawatts and 1200 MWh of pumped hydro energy storage. The point about JSW Energy is that while it's an expensive stock, the quantum of order win has been very, very impressive. It's almost as if the change of management has led to a change in aggression towards order win for this one. So definitely watch out for this one. That's the second one. And the third one is Sula Vineyards. For all the talk of how much people are drinking wine, etc., Sula's numbers leave a bit to be desired, really. Net revenue up just 1.3% YOY. In fact, own brands just 0.3%, and wine tourism about 1.3%. So not a healthy quarter. Let's see if the stock reacts.
You're desiring quite a bit this morning in terms of earnings. But just a quick mention on Sudarshan Chemicals. Remember on Friday it hit upper circuit on back of them acquiring Ubag's global pigment business for 1,180 crores. But what we also believe, which is a filing to the exchanges, that they would be looking to raising funds in order to fund this acquisition, and a board meeting is expected on the 16th. QIP very likely for Sudarshan.
So I would look at Ubag as well, because that's the acquiree of, and it's a German company, but their Indian subsidiary is Ubag, and that one had raised a fair bit in Friday's trade. Ubag colorant, and after coming off, so that's one that I would watch as well today.
Yeah, just one brokerage note that was very interesting because Adani Green updates came out. So MK has come out with a note talking about that, and MK has maintained the target price, a retained buy with a target price of 2550. But the numbers are interesting, viewers. The standard disclaimers, of course, the Adani Group owns NDTV as well. But MK says that the operational renewable energy capacity at the end of September 24 is 11.2 gigawatts, as a result of which they're penciling in numbers and growth, which is very strong. So renewable energy capacity CAGR of 30% during the FY24 to 30 period, 39% EBITDA and a 61% PAT CAGR opportunity over FY24 to 30. The compounded annual growth rate of 61%. I don't know of too many companies, forget in India, in the world, which will have a 60% earnings CAGR if this turns out to be true, of course. So do watch out for this one in the session today as well.
HAL could be the other one. They've been upgraded in terms of status, so that count as one. Motor tracks, lots and lots of stocks, and lots of stocks that will keep showing up as we, of course, run into the earnings season in full steam right now. A quick check on implied Nifty before we move on to Mahima, who's standing by. That's it. It's not a bad start, a 30-point gain, but nothing really to write home about either in early hours of ticking that we are seeing. Well, but circling back to Avenue Supermart, I highlighted for you the top-line numbers, and on the face of it, the numbers were a disappointment, as we've seen a decline in terms of various verticals or aspects of those earnings. But Mahima is standing by with more on that. Mahima, what is Avenue's numbers looking like when you deep dive? Brokerages too that don't seem very enthused.
Right, Samina. So in terms of the overall view of how Q2 has been for Avenue Supermarts, well, weak quarter and missed estimates on almost all fronts, and margins have been impacted at 7.6% versus that of 8% in Q2 FY23. Now, in terms of the highlight of the result was that management has acknowledged the fact that quick commerce is and the online grocery format selling is kind of impacting the growth for DMart. Now, on the back of this, brokerages have come out with their views. It's a mixed bunch when it comes to brokerages on Avenue Supermart. Well, to start with, Motilal Oswal has reiterated buy with a target price of 5,300, which posts an upside of 11.6%. They've estimated a CAGR of 17% and 20% in revenue and PAT over FY24 to 27. However, they've cut down their EPS estimates. Now, they're saying that DMart's revenue growth remains dependent on its ability to add store area and believes that store additions can pick up pace in the second half of FY25. And they would also, of course, watch out for the impact of quick commerce on DMart's like-for-like growth. Nuama, on the other side, has retained whole with a revised target price of 5,040. Which is an upside of 10%, and what they're saying is that weak Q2 is owing to productivity of stores, and DMart Ready's growth has also slowed down to 22% YOY in the first half from 32% in FY24, and they're building around 45 stores in FY25 to be added overall. Lastly, City on Avenue Supermarts, they've maintained sell with a target price of 3,500. Now, this is a 26% downside from its Friday's closing, and what they're saying is that bill cuts declined QOQ despite the addition of new stores, and EBITDA and PAT growth has lacked revenue growth in 7 out of last 8 quarters, and they've trimmed EPS estimates for 25 to 27 by 4 to 6%, and what they're saying is that valuations as risk reward seems unfavorable at 82 times for FY26 estimates. So these are the views of brokerages on Avenue Supermart's Q2 results.
Okay, so Mahima there on Avenue and brokerage is not that excited either on the company. I think Avenue also an important story to watch because consumption is going to be in focus in this entire quarter. Is consumption flailing or not? The other space on radar this morning is insurance, and Harsh is joining us. Harsh, a couple of interesting notes on insurance this morning.
Well, absolutely, Tamanna. You're seeing, first off, Morgan Stanley talking about life insurance data for the month of September. They believe APE for private insurers, of course, grew 28% on a base of 12%, so growth is strong. You're seeing APE for HDFC Life in particular at 25%. ICICI Pru grew even faster at 33%, so very strong growth where iPru is concerned. SBI Life, though, was muted at 19%, but on a higher base. SBI Life had a base of around 16% same time last year, and therefore the 9% number more justified but muted nonetheless is what they are suggesting. Now for Q2 FY25, Morgan Stanley believes that HDFC Life APE growth will come in around the 28% mark, very strong. ICICI Pru at 34%, but SBI Life more on the muted side at 11%. HSBC, and good perspective because HSBC also covers LIC. You're seeing good traction among private insurers is what HSBC is suggesting, but LIC too in terms of APE growth has clocked a 19% growth. They believe that LIC's growth has come from the push in the agency channel. Now in terms of what they believe also grew fast, Max Life and Bajaj Alliance also showed very robust growth, 34% nearly on both of those. HDFC Life, they believe, grew healthily is what they term it as, and growth was muted for SBI Life is how they are terming it. Citi on life insurers, now in terms of HDFC Life's numbers, they believe that it's likely to fare better than peers in Q2 FY25. Expect HDFC Life to deliver a 20% plus VNB growth versus a more muted set from some of the other life insurers. They are forecasting margins to decline year on year. HDFC Life's margin 70 bips on a year-on-year basis. LIC's ICICI Pru's to decline 4% on a year-on-year basis. Max Life to decline around 85 basis points, and LIC's to go down by around 180 basis points on a year-on-year basis. So you are seeing some margin decline expected as per Citi's estimates. LIC's growth is a one-off, is what Citi believes, expected to taper going forward. So keep your eye out on some of these life insurance plays and a lot of these views coming through.
For that, Harsh. That's the call coming on life insurers in one space you want to track in today's day of trade. Well, but as we gear up for trade, it looks like it's going to be another week where the markets may spend some more time consolidating. Agam is standing by with all the cues on the F&O space. Agam, what do we have this morning?
Right. Well, as far as day on Friday is concerned, where we haven't seen too much traction. In general, it was a quiet day of trade, and we continue to see, largely subdued cues in terms of change in open interest. So let's start by taking a look at that. About 1.4% decline in open interest there. Moving on, as far as the Bank Nifty is concerned, let's pull up the Bank Nifty and take a look at how things are panning there, and about 1.3% increase there as well. So not too much change there. Moving on, when it comes to the options market, again, 25,000 is what we are keeping an eye on, because that's where we've seen the most amount of increase in open interest for calls as well as puts. As far as stocks go, again, a mixture of trade, but we did have longs for India Mart and Oberoi Realty, and shorts for Cipla, Canfin Homes and Shree Cement. And on the other hand, an unwinding coming in for the likes of short covering, for Bandhan Bank, Dalmia Bharat, as well as Tata Chemicals. This is as far as the stocks go. Well, let's move on and talk about what we can do in these markets. And for that, we have Akshay P. Bhagwat of GM Financial, who's joining us on the show. Good morning, Akshay, and thanks so much for joining in. What's the first stock on your radar, and what kind of option structure are you deploying here?
Good morning, Agam. So the first stock on my radar for today is Tata Chemicals. If you look at the price structure of Tata Chemicals, it's given a price breakout after almost a 6 to 7 month of sideways price action. So that's a very positive development for the stock. Short covering seen in this counter after the breakout was seen, and the belief is that this stock is heading for levels of 1250 for the October series. So we devised a bull call spread strategy here to keep our risks or losses under control, where we are going for buying at the money 1180 call, which closed at around 44 premium on Friday's trade. We also sell simultaneously a deep OTM 1240 call at the premium of 20. So the net outflow on this strategy would be around 20 points on the option premium. Roughly, we are targeting around a profit of 9,500 on this strategy, and we will keep a stop loss of 5,200 on a monetary basis.
All right. And as far as Hindustan Unilever is concerned, again, Akshay, how are we going about this one?
Yes, so FMCG pack has been subdued since past few days, and the sense is that the technical parameters are pretty oversold, and HUL is one of the best pick, because if you look at the price structure last month, it did stage a breakout exactly around the levels of 2780, where it is offering you a second opportunity to again go long at the current level. So the strategy here is to devise a vanilla buy call, which is a simple buying of call for the 31st October expiry. The strike would be 2800 slightly OTM call, which is quoting around roughly at 47 on Friday's trade. We will target around 71. That's our first target. Second target would be 84, and we will keep a stop loss of 31 on the option premium.
Okay, well, there you have it. Those are two views coming in from Akshay of GM Financial. So we have Tata Chemicals and Hindustan Unilever in focus. Of course, we'll also be watching out for how things pan out on the index itself. But Akshay, thank you so much for joining us and taking us through that. Of course, if you do have more queries, don't forget to, watch our show at 10:30 on the F&O show, where we do take up your queries, and you can always write to us on the WhatsApp number that is flashing for you on your screen. With that, it's back to you all.
I think we should have that number if we can. We'll get that number in a bit, viewers, but keep in mind that that's a number you send your queries to between 10:30 and 11. Derivative queries will be answered on the show. If you have stock queries, then ask Profit between 11:30 to 12:30.
And if you have future queries?
I think 10:30 to... My go-to event is the 8:30 to 8:40 segment that Agam does.
Okay, and then, of course, 10:30 also is one show you want to track. Well, let's quickly do a quick check on what the brokerages have to say. Anushi is standing by with more on what MK is talking about. They, I believe, have initiated a buy on Nalco and Vedanta. Anushi, what and why is MK initiating a buy call on Nalco and Vedanta? Largely on back of the way prices have been trading on the LME?
Hey Samina, good morning. So MK has initiated coverage on the metal sector in general, and as you mentioned, there are several factors that one needs to keep in consideration for. So if you look at Nalco, they've initiated a buy at a target price of 275, which is a 23% of an upside, while for Vedanta the target price is 600, which is 21% upside. But for Hindalco, it has given a reduced rating for this one, seeing a 13% downside. So some of the reasons that we are seeing is favorable supply-demand dynamics for the aluminium space going forward, with expected prices at $2,700 per ton in 2026 compared to the expected $2,400 per ton in 2024. Also, they are seeing more value addition going forward, with the cost to be reduced among the players, and more backward and forward integration leading to higher value addition. Also, what remains as a focus is China, obviously, as there are effective measures taking place, with more stimulus measures taking place. So China also remains as a watch out for. But just coming to the company specific highlights as to why they are saying this. So if you look at Nalco, they are seeing a solid earning momentum in the next 2 to 3 years, with expected EBITDA to double by FY27. Even if you look at Vedanta, now the main focus remains on the demerger, and group is in the final stages of these demergers, which will lead to 6 separate business verticals. So they expect a valuation premium over these pure plays that compared to the diversified miners, and sees a strong case of re-rating in Vedanta Aluminium and Vedanta Power. And coming to the last one is Hindalco, in which we are seeing a reduced rating. It expects that the stock has priced in all positive, which also included some of the gains of the Nalwala's IPO, which was called off. So these are the stocks that should remain in focus for trade today.
Right, thank you for that, Anushi. That's, of course, why MK is initiating a buy call on Nalco and Vedanta, 2 counters to watch out for. And, of course, on back of what's happening in China and the movement on LME prices, these counters could be movers in today's day of trade. We have the Soni Patnaik and Kush Bora both joining in with their technical view on the markets. Soni, good morning. Just a quick one on the Nifty. What is the trading strategy? We came out of a very tough week. Last week was a week of nothingness, like I'm calling it. The Nifty was volatile but lacked momentum and traded in the tight 500-point range. As we start this week, long trades on the Nifty and Bank Nifty can be initiated, or is it best avoided for now?
Hi, good morning, Samina. Thank you for having me on your show. I think Nifty is very much in a range for now. 24,900 be acting as an intraday support, and on the higher side, there's a resistance of 25,150 odd levels. So this range is quite a small range, and either side of the breach can determine a further trend. However, for a true short covering in Nifty, it has to cross the 25,300 mark, where lies a lot of call writers and the 20 EMA hurdle. I think that's a key level to watch out for. It's also imperative to understand that the FIs have reduced their long positions, which started around 83% for October series. They've dropped to 36% now, and increasing the net short. So there's a possibility of any rise towards the resistance may see a sell-off in Nifty until and unless the 25,300 level mark is not getting crossed. So for today, there's a possibility that 24,900 may hold, and it can test the 25,100, 25,150 resistance area for intraday basis. That's the play to watch out for intraday. For a positional play, it is better to wait for the 25,300 mark to cross.
Right, Kush, what about you? What is your trading strategy on the index? We've shut shy of 25,000. Flat start expected this morning. And also Bank Nifty. No follow-on buying on Bank Nifty, and hence it sort of, eased off on Friday. How would you trade both these indexes?
Hi, first up, a very good morning to you and all the viewers, and a happy Monday. Let's hope it turns out, as one. But there is consolidation on this street, no two ways about it, and the broad range on the Nifty is 24,700 on the downside and 25,200 on the upside. Now, as we just heard, there is a possibility that, we might consolidate for some time. But as long as that downside of 24,700, 24,800 is held, it's not a bad idea to continue holding on to long positions. Should you go out and create one? I wouldn't say so just yet. The only reason being that 25,200, as we spoke, is a resistance mark, and the risk reward ratio is not favorable. So if you do get a dip towards 24,800, 24,850, that's when you should go out and create long positions with a stop loss of 24,700. The risk reward ratio becomes favorable. Also, one more point of caution is that, we've had 25,000 put acting as a strong base for a while now, but on Friday, the OI on the calls actually overtook, the put base. So, which is also suggesting that there could be near-term pressure. So, any kind of pullback should be taken as an opportunity to create long positions, not just yet. Bank Nifty was turning out to be, more favorable trade, but here too we are seeing that resistance around that 51, 250, 51, 300 mark. So once that is taken out, do you take a long trade on Bank Nifty from a momentum perspective? So both these trades are conditional. I wouldn't suggest a long trade immediately on either of the two indices, but on a pullback, perhaps you could consider, Nifty, and on a momentum breakout, Bank Nifty.
Good morning, Kush. Just in terms of picks today, what do you have on your radar? And is HCL Tech, RIL? Let's start with that before you get to your picks, because both of them with numbers coming in and will be in focus.
So, as far as HCL Tech is concerned, this has remained one of our picks in the large cap space in the IT names, and, does actually look good on the charts. I remember a discussion I had with Niraj just before TCS results, and we said that the consolidation is with a negative bias, and hence just before the results, it's best to avoid it. Glad that's played out fine. On the HCL Tech charts, there is a slight momentum pickup, there is slight volume pickup, but nothing to write home about. So, if you have a long trade, you might continue to hold on to this one. I wouldn't suggest creating fresh longs, especially just before results. So even if you have a open position, then 1800 is where you place your near-term stop loss, and then once the results are out, once the event is out of the way, you see how do you go about it. Reliance Industries from a medium-term perspective is looking nice. From a near-term perspective, there is very clear selling pressure. 2700 being a medium-term support zone. If that breaks, then things could get a little worse for it. So don't create any fresh long positions from a near-term perspective on Reliance just yet. Medium term, the risk reward ratio is looking very interesting on this one. Now, as far as my picks go, two of them. One is CG Power. Had a phenomenal week, last week in terms of the volume action as well, in terms of price action as well, and ended near the high point of the week. So this momentum from a near-term perspective could continue till 885, 910, and 835 is your stop loss. Also, one stock that even you guys were discussing just a while ago is Hyundai. Had a very interesting move. Although there was slight volatility on Friday, closed off the highs, but with the news flow, with the volume action, I think there is room on the upside for 699 and 725 kind of levels. 650 is where you place your stop loss.
So, Sony, since Kush just talked about Hyundai, before we get to your picks, Sudarshan was pretty much on a circuit on Friday, but anything interesting there once you have markets opening?
Good morning, Tamanna. So I think my picks would be both on the long side. So one would be for GAIL, which has given a good breakout above a 20 EMA close on Friday. And one can buy it in the range of 230 to 228, keeping a stop loss of 225 and look for higher targets of 236 to 240. The second buy would be in Oberoi Realty. Now, when the stock had started the October series, it showed very aggressive long rollovers. However, the stock corrected towards 1750, 1740 odd levels. There's a very sharp recovery from those levels again back to 1900. So there's a good option chain breakout that has come in Oberoi Realty once again. One can buy around the current levels of 1920, keep a stop loss of 1850, and look for higher targets of 2000 plus levels for October series.
You see Oberoi, independent of the price action, the fact that a stock or a market cap which was probably 6,000 crores 4 years back has passed a resolution to raise 6,000 crore rupees is showing what the stock has done, of course, and as all real estate has. But if the other big thing about Oberoi Realty is that it was a candidate for inclusion into MSCI, but the free float didn't allow that. Now, if they do this 6,000 crores of fundraising, presumably all through public shareholders, then it becomes automatically eligible for an MSCI inclusion, and that means significant inflows into Oberoi post a successful fundraise if they raise the entire 6,000 crores. So it's it's something to watch out for when it comes to Oberoi
And
Realty.
they've done some amazing stuff this year. They've gone out and, got that approval from the NCLT, picked up Nirmal Lifestyle Realty. They paid about 280 crores. Numbers have also been very, very healthy. And I think it was about, early September when they managed to sell properties worth 1,100 crores. So all in all, fundamentally, it's looking good. But yeah, like Niraj said, 6,000 crores is a huge sum of money they're looking to raise. And a successful fundraise plan will definitely have a positive impact. The stock for the month of October has also done really well. And I believe that could be one reason why Sony is constructive on the trading strategy in Oberoi Realty. Aditya Shah as well, founder of Hercules Advisors, joins in. Aditya, why don't we start with Oberoi Realty? We were talking about how they're going out with a significant expansion, significant fundraise plan of 6,000 crores. Technically, Sony likes the counter. Fundamentally, do you track Oberoi? And if yes, do you have a constructive call too on the counter?
Good morning. So as I've been saying, we are very positive on the real estate sector. We are seeing a ferocious upcycle for quality developers coming about, and that's been seen in the stock prices per se, as well as the inventory launches getting lapped up across big cities. So I'm positive on the real estate back per se. However, you need to stick to very good and quality counters here while you are investing. Somebody like a Godrej Properties, which is doing exceptionally well in Delhi, Bombay, as well as now in Bangalore. They are doing exceptionally well, and that's one of our top picks. And our second pick continues to remain Oberoi Realty. Their expansion into MMR, the metropolitan region in Bombay, is really paying off for them. And as you've seen, the fundraise also coming about. So valuations are a little bit expensive now. One must be really very careful. But I see the real estate cycle doing well over the period of next 2 years as well. So positive on real estate. Topics will continue to remain Godrej Properties and Oberoi
Realty and Godrej Properties. So there's two buy calls coming in fundamentally by Aditya. Well, the other space, Sony, we should talk about is what is happening in metals. Friday, we did see some activity. Most metal stocks gained in anticipation of Chinese stimulus, which in detail has still not been announced. While they did see that buying on Friday, the fact remains that the whole week, the metal index was down 1.5%. Do you feel like there's still opportunity to be made money on metal names this morning?
I think, Samina, only one stock which has clearly caught my eye throughout the entire October series would be JSW Steel. Now, it had shown very strong rollovers. It tested a high of around 1,060 odd levels. It corrected from those levels, but never broke below the 980 support. So that support is very much intact. Even though the indices have corrected, it just stayed till towards the 980. So I think one can continue to hold for longs in JSW Steel with a very strict stop loss of 980. The stock can bounce back towards its previous highs of 1,060, 1,070 odd levels. And if it continues to remain in that uptrend, it can even test 1,100 for October series. So this one stock which can outperform the rest of the metal space and counter, I think this is the stock to watch out for when it comes to the entire series.
Okay, so JSW Steel. Aditya, let me come to you. Good morning. Tamanna here. Let me come to you on Sudarshan. I asked Sony the question earlier, but I think she couldn't hear it. But Sudarshan Chemicals, Huback. That stock on radar. We're going to be speaking to the management and hearing from them also later today. Do you see a further upside here? And is it a company you track at all?
Exactly what I was anticipating within the chemical sector. Now there's consolidation playing out. Companies which are bankrupt are being taken over by companies which are fundamentally very good and very strong. This is really very good news for Sudarshan Chemicals. This news was already out over the last 2 to 3 months that Sudarshan Chemicals is going to take over OIBA. Within the pigment space, OIBA continues to be a very strong market leader. So I don't think that this consolidation is really a surprise. Overall, for the chemical sector, now from a down cycle, we are moving into the consolidation phase. And then from the consolidation phase, from some point in time, we will move to an up cycle. So positive for Sudarshan Chemicals per se, but all of it is now in the price. There's nothing, no more upside left per se. One must be really careful to play this news. For OIBA also, it is really very positive, and for the entire chemical sector also positive. But now do not take positions in Sudarshan Chemicals per se.
Interesting that the upside is done. I think that's very interesting that the news has played out completely. I don't know, Sony, if you've been tracking this, Sudarshan, is there any technical trade here? Or you agree with that point that the upside is done?
Right. So sorry, Tamanna, I could not hear when you first asked the question.
No issues.
So I think on technical charts, we can see that the volume-based breakout had come on Friday close. The breakout, although, has come above somewhere around 1125 to 1130 odd levels. And the stock is very much above that level. So there could be a dip of another 3% or 3 to 4% of a profit booking. However, if it continues to hold the level of that support 1125, there can be a technical bounce back again from those levels to 1200. At current levels of 1200, it's certainly not a buy. We recommend that, once you see a dip or a profit booking towards the support levels of 1125, you can enter with those levels and look for again a bounce back towards 1180 to 1200 odd levels. So I think 1125 is the support stop loss to watch out for.
Okay. Watch out for Sudarshan Chemicals. By the way, remember, expensive stock by virtue of the fact that the last 12 months stocks really haven't yielded results. So like 69, 70 trailing PE. Not cheap for sure. Let's see what this one does. One quick thing is on Bajaj Housing Finance. Now, after coming off about 8-9% from the highs of 181 or thereabouts, or slightly more than that, today, more shares hit because the anchor lock-in, the first anchor lock-in opens today. Aditya, if you were an anchor investor in Bajaj Housing Finance and you made money on the IPO, would you take money off the table today?
So Niraj, it really depends on my time horizon.
You, Aditya, you know your time horizon best. Will you take money off the table today?
Yeah. So we personally are invested to the IPO and we are not selling the stock. We are bullish on Bajaj Housing as well as Bajaj Finance. But my time horizon is the next 5 to 10 years where I want to play the India housing story, the affordable housing story, and that story is just getting started. Of course, the stock is exceptionally expensive at trading at about 8 to 9 times price to book, but hey, you are talking about Bajaj and not any other housing finance company. So short-term investors, they should take price or they should take money off because there could be a time correction in the stock. Longer-term investors, any dip towards 100, 120 is a buying opportunity. The business continues to do exceptionally well. They have controlled their NPAs and moving on a 20 to 25% growth within the housing finance space, which is a secured space where probability of NPA are much lower than an unsecured space, is really very positive. So in my opinion, long-term investors should continue to stay invested and any dips towards 120 should be a buying opportunity.
Well, on what is on Profit's watch list, 9 stocks in focus. I'll start off with the first 3. Ashoka Buildcon has gotten a 2,310 crore order and therefore that stock could react positively. The other one is JSW Energy storage deal with Mahagenco, and therefore that stock could be a positive one as well. And Valor Estates, 13,374 units bagged in an affordable housing project, could be an interesting one today.
Well, just to build on that list, GSFC, they've started a 6,600 crore MTPA plant. So watch out for this counter, even though it remains in an F&O ban today. Wipro, this is an important one. This is the first bonus issue since 2019. The company will be mulling a bonus issue when it meets to first announce its numbers on October 17th. HAL has been upgraded to Maharatan status, so this counter becomes an important mover, sentimentally at least.
And what is going to see a bit of pressure today? DMart. Avenue Supermarts, a weak quarter, they've missed estimates. Indoco, their Goa facility status remains OAI despite a second check. First one was in Feb last year, in July this year, again back with an OAI status by the US FDA. Bajaj Housing Finance could see a bit of pressure. Their 1-month anchor lock-in opens. We'll wait and see if that is bought into or you see selling pressure coming in there. So these are some of the stocks on your watch list. Implied open has been improving dramatically. I mean, bit by bit from where we started the show as well. So we're possibly set for a decent start. Very quick break. We're right back with the pre-open rates and more. Stay tuned. right, you're watching India Market Open. Just about a few seconds left for the pre-open rates, and we'll wait for them to hit. But meanwhile, one big factor this week is going to be the largest ever IPO that will open, which is the Hyundai IPO. Remember, it's also exciting because it's a car maker coming to the primary markets after over a decade. The last one was Maruti. Now, what is the view emerging on Hyundai? To speak more on that, I'm joined now by Pramod Amte, Head of Institutional Equity Research at Incred Capital. Pramod, thank you so much for speaking with us. Now, before I get to your take on Hyundai and the space, let me start by asking you about these concerns that an IPO of this size will suck out some liquidity from the market. There are differing opinions on that. Was wondering what you think.
I think you have to see in the context that, as you rightly said, it's the largest IPO, but the industry is definitely going through some amount of consolidation. And it's not just the car industry where the IPO is placed, but the broader auto space itself is having a very, very selective volume growth. So in that background, getting such a large value IPO becomes challenging when you have priced it for perfection. So those are the context of the industry slowdown versus the company's proposition, which is trying to defend its number 2 position versus the competition, which is trying to fight out with new models. Whereas Hyundai has a very strong pedigree of global parent and seems to be better future ready. But if you look at even Hyundai's performance in terms of volume, it has been relatively underperforming the industry. So in that context, it looks like a price for perfection and may not be giving any immediate returns post the listing.
So in terms of pricing, you're saying it's priced to perfection. 1865 to 1960 is the price band. Give us a sense, Pramod, of how you see it compared to its peers, how you see Hyundai compared to its peers right now.
So if you look at the broadly in terms of fundamentals, it has a unique proposition in the medium-term investment opportunity in the under-penetrated car industry in the overall automobile space. It has a better product mix in terms of exports and SUV. And as I said, it's a better future ready with a relatively stronger parent coming from Korea. The third point is basically, in spite of a lower scale of operation, has a marginal better EBIT profitability, in spite of being inferior, I would say, like a gross margin or warranty cost or net working capital. Having said that, those are the fundamentals which play out. But the key point to note out is also what's happening in the marketplace. As I clearly indicated to you, last couple of months, the slowdown has only accelerated for the car industry. There clearly, Hyundai seems to be underperforming. So they need to fix up the new product launches, which has been favoring some of the competition. So that is very essential. We need to look forward for what is the new product plan for this to recover as they go forward in the second half of next year. Coming to the valuation, when we look at the pure car play, which is Maruti, it's almost on par on a forward PE basis and a sharp premium on a price to book basis because they withdrawn a large amount of dividend last year. It's almost like a 200% premium on price to book. The only advantage they have is on EV EBITDA basis, where there is a discount on 20%. So in that context, if you look at some of the concerns of high related party transactions and the struggle for number 2 position, whether it will sustain, we feel the IPO is priced for perfection and limited room. So within the overall car space, our preference will be for Maruti over any of the other car peers, either it's Mahindra or to that extent even Tata Motors.
Right, Pramod, well, let's talk about the outlook. You've already talked to us about the valuations and how you do feel like it's priced to perfection. In your opinion, what are Hyundai's competitive strengths in the market and how do you think this could impact its future outlook? What verticals of the business should investors be betting on if you want to go out and buy into the Hyundai story?
So I think, as I said, the strength is definitely perceived, I would say, Hyundai as a global company versus Maruti, which has its own shortcomings, being India is the major market. So that's the perceived options. Having said that, there is a hope that they should be able to get a better value growth as industry volume growth is slowing down. But if I had to compare the last 10, 15 years, the performance, their value growth is either on par with Maruti or sometimes even inferior to Maruti. So hence, we need to see how they will pan out with the new products as they participate in some of the new segments which open up, which is basically either EVs, where they have a better success rate compared to any of the Indian peers or global peers into the global markets like Europe and US, whether the similar products can fit in or whether they can be brought in with a better tweak to the Indian market conditions at the right time so that they can ride it. Similarly, in case of hybrids, where the parent is now talking about looking for expanding their investment into hybrids as also is the case for some policy tailwind which is emerging in the Indian markets. So in that context, the agility of management to bring these new products and improve its hit rate is essential to look forward as a strength.
All right. Thank you so much, Pramod, for joining in today. So that's the view on Hyundai. Definitely going to be an interesting and exciting IPO to watch out for. And, Aditya, I don't know if you have a take. It opens up tomorrow and we'll be discussing it in greater detail. But do you think that the passenger vehicle space now gets more exciting?
So definitely it does. Hyundai is the number 2 car manufacturer in India, and it is a strong brand, and it opens up the four-wheeler car space per se. But the IPO is not cheap. It is really very expensive. On top of it, it is a very big IPO that is coming about. So as I said before as well, my topic within the space continues to be Mahindra and Mahindra, given the fact that they have got their PV space as well as the agri equipment space that Mahindra has really got, and the company is doing exceptionally well there. So rather than going towards the incumbents, which is Maruti or Hyundai, I would rather recommend to go with Mahindra and Mahindra first.
For that, Pramod, great talking to you this morning. That's the view coming in on Hyundai. Pramod does believe that it's priced to perfection and gives little for one to desire. Well, but we do have lots lined up for you. The markets, of course, gearing up for trading this week. It looks like it could be a positive start on the street, but if that sustains is what the bulls would want to see in today's day of trade. Economic data as well will be important, so watch out for that later on in the day as we have WPI and CPI data that's expected. Well, Harsh is standing by as always with his top brokerage call this morning. Harsh, what do we have?
Well, JP Morgan initiating coverage on the heavyweight Larsen and Toubro. What JP Morgan is seeing is a 25% upside from here. They believe valuations first off look very reasonable. In terms of valuations and what they see on that count, 25 times FY26 EPS as per JP Morgan forecast is what they believe L&T currently trades at, which is reasonable. 23% EPS CAGR is what they expect from FY24 to FY27, and therefore they believe this 25% kind of upside justified and well captured. That's one. Second is they believe that from a business standpoint, company offers attractive combination of growth at a reasonable valuation. They're expecting core margin to improve by around 60 odd basis points, 0.6 odd %, and expansion from FY24 to 27, just these 2 years, they're expecting a 60 basis point expansion in core margin. They're also suggesting on the top line front, L&T is well poised, both in capturing the capex tailwinds in India as well as in the Middle East, and that will further aid the top line for L&T. Current valuations looking very reasonable to them. 25% upside is what they believe L&T offers at this current market price.
That's the brokerage call coming in on L&T this morning. Well, very quickly, I'll go across to Sony, of course. Sony, what's the call on RIL and Wipro? Both those counters important. RIL per head of earnings and Wipro because it's outperformed the tech pack, and we believe there's a bonus issue around the corner.
Right. So, Samina, if we talk about Wipro, then, the way it's opening today around 540 odd levels, there's a resistance approaching around 550, 555. So that will be quite important to watch. If it's able to take out that resistance, you can see it heading higher towards 580 to 600 odd levels. I think that's very important. And it also, it's holding above a 2010 EMA support for today. So I think that's important to watch. 530 is going to act as a very crucial support. So any day, any hold above this level, and if it attempts to break the resistance, you can see it heading higher towards 580 odd levels. If we talk about RIL, then of course, the stock has been consolidating. There's a good support of 2,720 odd levels. I think that's the level to watch out for. Not a lot of positive on current levels, but maybe any break above 2,800 can see the reversal and head higher towards 2,900 odd levels. So I think as long as it holds above 2,720, it can test the resistance of 2,800 and maybe likely break also above it.
Okay, Reliance Industries. By the way, just want to mark metals and see how they have opened in the pre-open session. So Hindalco, Nalco, SAIL, all of these stocks had ramped up in Friday's trade. Are they cooling off? Not really. I mean, flattish for Hindalco. In fact, SAIL and Nalco have opened higher. So China commodity futures opening up, and that leading to these stocks actually not doing too badly today. Now, Kush, if you were long in Friday's session, because a lot of people were, would you take money off the table, or are the charts still constructive for some more upsides?
For the metal names?
For the metal names.
Well, some of these, are looking at resistances, and if you see there is some supply pressure coming in. So, let's say, something like a Tata Steel, it did cool off from the high point of the day. 164 was the high, and the stock closed actually quite lower. So, if you do get that kind of a bump up, it's a good idea to take some money off the table. Anyway, this pack sees a lot of volatility. It's more of a trading bet. So, any kind of profits that you get should, timely be taken off the table. Otherwise, you could see further downside volatility on these names. The one stock that we like in this space, I think Sony also mentioned this earlier, is JSW Steel. Consolidation done, 20-day moving average support respected and on the way up. So if you want to create a long position, perhaps that's one stock that you can consider with a stop loss of 990 and on the upside 1030, 1050 are the targets to look at. But otherwise, if you've got a long position from Friday, take some money off the table.
One stock that could be your top Nifty gainer today potentially could be Wipro. In pre-open, it's up nearly 2% ahead of that bonus issue. And you've also got a little bit of maybe bottom fishing that's emerging in consumption names. Remember, stocks like ITC had it very rough all through last week. No apparent reason for selling, but the selling was intense. Sony, you want to come in on ITC, Britannia, Godrej? Do you feel like traders could play these counters for a bounce back? Because last week was not good for these names.
So I think, Samina, the selling pressure in entire consumption pack may continue, and any rise could just be another resistance level from where the selling pressure can be seen again. If we talk specifically about ITC, it has given a breakdown below 500 level, not able to sustain above those levels, above those resistance levels. So I think any move towards 500 to 505, that can be the resistance area. If it crosses that level, then well and good, you can see it bouncing back towards 530. However, if it fails to cross those resistance, you can see another round of selling pressure. And again, the stock can test lower towards its support of 480 to 470 odd levels.
Okay, let's just mark some movers in the pre-open session. And one that stands out is Avenue Supermarts. The numbers were less than exciting, to say the least. 8% down on the stock. A whole host of brokerages also not too constructive on it. I just want to get a quick view from Aditya quickly on what is the story there. A mixed view coming in from research houses, Aditya, and some of them saying that what they have lost in like-for-like has been made up with a kind of expansion of number of stores. But are you convinced with that argument?
Tamanna, DMart is DMart. It is the lowest cost producer of grocery across India. I don't believe that they have lost any of their edge. It is just that the growth has slowed down not only for DMart but also for Reliance. I see Reliance JioMart also closing down some stores as profitability is not there. So net, the stock is really very expensive. And when stocks are priced to perfection and growth doesn't come about, that's the problem that you see the stock prices fall dramatically. So in my opinion, the stock is expensive. Any fall towards 3,800 or 4,000 should be used as buying opportunities. The longer term story on DMart continues to say, however, over the near term, there could be some time correction because of the expensiveness of the stock. However, I am positive on the company personally.
So must mark though, one of the reasons why it is down 8% is that while the growth, one, the results are below estimates, and two, as one of the notes puts it, so Citi as a sell, Jefferies as a hold. Citi is much more negative on Avenue Supermarts, but Jefferies mentions that the 22% growth in isolation by itself is strong. But compared to quick commerce, it fades. And then, of course, the valuations of DMart always hurt it. But let's wait and watch. This is the Jefferies view, of course. Target cut to 4,400. It's way below that already. But it's a quick commerce comparison that is hurting DMart. I presume one of the reasons. But anyways, we'll figure out how it opens post this pre-open debacle that has already happened. Here come the first trades this Monday morning. The index opens up about 0.25% higher. So 65 points, slightly better than what the pre-open indicating was at 7:30 or 8 in the morning. Nifty IT, 0.6% higher. Wipro leading the way, I reckon. And that is helping the index too, by the way, because the banks are almost in line. Let's pull up the mid caps and small caps and then the heat map up on the screen. So mid cap indices, 0.33%, small cap index, 0.33%. Let's get the heat map up on the screen. Wipro, somewhere right up there. Top draw, 3.5% higher. Then Larsen & Toubro and Tata Steel. So Larsen & Toubro on the brokerage note, of course, from JP Morgan. But metals are doing well. Tata Steel, JSW Steel, both of them in the green. Don't quite see any other. Hindalco is just 0.45% higher. But steel stocks certainly doing well for themselves. BPCL, about 1% higher. HDFC Bank up about 0.6%. More green than red. On the losing side, not too much. Ultratech losing out. ONGC marginally, but not too much to talk about in terms of losers really. So the news from the large cap space is, of course, that metals are doing well as a pack. And from the gainers list, I think Wipro and L&T stand out. Wipro for the bonus issue, L&T for the brokerage note, Tamanna. And remember, viewers, for Wipro and an IT company, a bonus is that much more important simply because they're dividend-paying companies. And for the bonus makes a material difference to a shareholder. No wonder it's up 2.7%.
Coming after a while for Wipro, so that's added to some of the buzz this morning. So not a bad Monday morning at all, to be honest. More green than red, definitely. Let's pull up the sectoral indices for you before we get to stock-specific stories. No runaway gains, but you're staying above the 25,000 mark on the Nifty quite comfortably. And Nifty metal metal stocks basically turning out to be the winners this morning once again. Expected after the China moves and announcements that have been coming in. Nifty IT also doing fairly well ahead of HCL Tech numbers. That index about 1% up. What's flailing is Nifty Auto, but look at everything in the green. So what a nice screen this morning. India VIX is also in the green, which is not great, but everything else in the green. Let's look at specific stocks and results is dominating. So some of the results which have been out over the weekend, let's pull those up. Avenue hurting in the pre-open session, ouch, and it doesn't get too much better. 9% down now and counting on Avenue Supermart in the first few minutes of trade. Hathway, good results, we call that out, so that's looking good. Sula Wine, actually the numbers were a bit disappointing, but the street seems constructive on Sula. Avenue is the top loser this morning. Just pull up Wipro once again. Niraj has marked it, but just because of the kind of strength you're seeing, about 3%, 2.5% up. PNC Infra is the other one. So whole, host of companies on order wins are flying this morning. 2,040 crore order for PNC Infra. This is coming from Citco and for development around the Navi Mumbai airport. 3.5% up on this. HAL is the other one we'll look at. Maharatna status has been granted, 1.5% up on Hindustan Aeronautics. Vellore has got a slum development LOA. This used to be DB Realty. Stock is mildly in the positive, nothing great over there. Ashoka Buildcon is the other one, which has also seen an order win. So that is 6% up, definitely buzzing in today's trade. Let me pull up Sudarshan and Huback because acquisition was the buzz, and you saw both these stocks running up on Friday closing. Remember now, Sudarshan has come out and said it's also going to raise some money. We're talking to the management in a bit from now. It's an acquisition in the chemicals space. So Sudarshan and Huback will pull that up for you in just a second. Meanwhile, let's look at Bajaj Housing Finance as well. All right, both of those in the red. Huback really getting hit hard, 10% down now. Remember, this was running up in Friday's trade. Some profit booking and more taking place there. Sudarshan also. The upside is over, and that's what Aditya Shah had told us earlier in the show as well. Just Bajaj Housing Finance, the last one that I want to mark because the lock-in ends, and lo and behold, as expected, some selling pressure coming in there. 2.5% down and even more. So some very stock-specific stories, Samina, but no big movers and shakers this Monday morning.
Yeah, it's taking the day off fairly quietly, and I think that might be a good thing. A little bit of a steady up move after a week of nothingness may not be too bad for the street. What's catching my eyes on the Nifty 500 is what Aptus is doing. Not sure what's going on the stock, but Aptus Housing is now up 5.5%, and it's turning out to be a top gaining counter on the broader markets. Poly Medicure also looking good, nearly 5% on the stock. BLS International is up 4%. Zomato, that one's been quiet for the last few days. It's back in action, and how? A good sort of up move on Zomato is what we have, 2.5% higher on the stock. Bikaji is doing well. The counter is trading well. Bikaji is up about 4% in trade. PNC Infra is up 2.5%. GSFC on back of commissioning of a new plant is seeing an up move of 3% in trade. Inox, Wind, TND, so a bunch of those EPC players are also looking quite good. Metals as a pack is having quite the field day, and this comes in as no surprises. Remember, Friday did see an up move, but for the week, metals have been down and out. So they clocked in about a 1.5% cut for the previous week. So what we are expecting is that the gains may continue into today's day of trade, only because the rest of the week wasn't too great for the sector on expectation of a boost coming in from China. So the whole metal pack looks good. HAL on back of a Navratna status looks good with a 1.5% up move. On the sell side, you've got Avenue Supermarts that Tamanna has already highlighted. It's the biggest loser, but it wouldn't surprise me that the stock sees some buying emerging at those levels and may show a little bit of a recovery through the day. UBAC Colorants is down again after a 5% cut on Friday. The stock is down another big move, 11% lower is what we have. Sudarshan Chemicals, I'm not sure if you checked that in opening trade, but while we're at it, let's do a see. Sudarshan is muted as we see it in trade. Just Dial is up 3.5%. Take a look at Quick Heal. The stock was one of your top gainers last week, up 20% in trade. This morning, of course, trading flat as we see it. Ola Electric down 20% for the month, 9% on Friday. It continues to be rough for Ola Electric. Another 1.5% lower on the counter is what we have. Network 18, the street was disappointed with the earnings. The stock is down 2.5%. A quick check on Hathway as well. They reported numbers, and the street may have been sort of impressed by those earnings. 4.5% on Hathway is what we have. Sony, so that's the opening. Quiet morning, but not a bad start. It's stable, it's steady. Companies that are being rewarded are, of course, on back of earnings. The ones that are getting punished are also on back of earnings. And you have stocks like Aptus that are doing quite well. But anything that you've identified in the first 5 minutes of trade?
Yes, Samina, I think over here, Hero Motors is looking good for intraday purpose. It's given a good bounce back above the 5,500 mark. So I think one can continue to hold a long in Hero Motors, keep a stop loss of 55.20 from current levels, and a target of 56.50 to 5,700 can be seen.
Hero Motor Corp 1.35%. What else is moving around? Polycab is ahead of the results, is down about 1%. So do watch out for that one in the session today as well. And there is some strength in small cap names maybe, but real estate too is taking a bit of a cloud. So watch out for that bucket as well. Kushbora, anything that stands out for you on open?
First up, Hubach deserves a mention. On the downside, we had discussed this with a stop loss of 650. The stock opened at 625 and hasn't really gained ground at all. So the call wasn't initiated at all. So I think that's the one that you sort of keep out of your list now. The one stock that's catching my attention after opening is Shilpa Medicare. Last 4 sessions, very good moves. Today also, if you see for the morning, 5-7 minutes that are done for the market open, the volumes on this are very exciting. The stock is about 1.5% up, and the near-term resistance comes in about 920 odd levels. So still some money to be made, on the trade. So Shilpa Medicare can be considered, and on the downside, you're looking at a stop loss close to 860, 865 kind of levels. So the risk-reward ratio is fairly attractive. So Shilpa Medicare for a near-term trade can be looked into.
Okay, Shilpa Medicare can be looked into. I just want to look at Zomato this morning and firing away. Zomato and Saregama, two interesting stories from the broader markets that we are seeing. Saregama now losing out because of a report. Remember, they were in the race apparently to buy Dharma. Now there's a report this morning that RIL is looking at Dharma. So maybe Karan Johar's gain with RIL is Saregama's loss, about 4% down.
Or maybe the street might believe that will there be a bidding war? And if Saregama has to pay a lot more than what it initially thought, because Dharma's financials aren't quite looking the best.
Yeah, that's true. Will there be a bidding? I mean, I don't know who would, between Saregama and Reliance, that's a tough bidding war for Saregama to be in, and whether they'd want to be in it at all. So that's one interesting story. Zomato is the other interesting story. Aditya, any views on Zomato?
We are all expecting Swiggy's IPO to come about, but Zomato has put a daylight between them and Swiggy. Zomato is doing exceptionally well, and on top of it, Blinkit is also doing exceptionally well. However, the stock is exceptionally expensive, and here on, you need to really be very careful on the stock. So I think that the stock will undergo time correction as the company's performance continues to ramp up. Long-term investors can continue to stay invested, whereas short-term investors should start to profit book in the stock because it is really very expensive.
Okay. The other set of stocks we marked, of course, amongst the loser list, Avenue Supermarts topped the list, but Bajaj Housing Finance, with this anchor book opening, has taken a bit of a stick in the session today. And Concor has taken a bit of a stick today. The ask rate on Concor for the second half is very, very high. Now, Aditya Shah, fundamentally, no disinvestment trigger. Performance in the first half, not quite the strongest. If you have Concor in your portfolio, is it prudent to give it away? Or is it prudent to stay invested?
So Niraj, with all of these PSU companies, I am very, very careful now, given the run-up all these PSU companies have really given, and the performance will start to catch up slow and steadily. So even with Concor, I would be really very careful. Even though the freight rates are going up, however, they are reaching some unsustainable levels that they will need to undergo some corrections. So I will advise investors not only in Concor, but the entire PSU pack. Someone like a HAL, which has got a Maharatna status today, one must be really very careful because they have got a big order book. However, it will take a long period of time for HAL to execute the Tejas orders that they have got. Valuations on all of these companies are really very expensive, and in my opinion, over a longer period of time, it will be unsustainable for these companies to trade at those levels. So the rally has played out on all PSU companies like Concor, like HAL. We need to be very careful on these stocks now.
That's the call coming in on Concor and HAL. Kush, in terms of a trading strategy, would you buy into Wipro's trend this morning?
Not really, Samina. There hasn't been a sustainable up move on Wipro for a while now. We had seen something somewhere close to May, June. There was a beautiful rally that had come about. A very strong trend. But from there on, it's been negative or sideways at best. So the jump that you're looking at, even today's move, hasn't really been a sustainable one. It's opened near the supply zone of 545, 550 has given way. So I wouldn't trade Wipro for sure. Even on the bounce that we're seeing today. On the contrary, from the large cap names, what we discussed was HCL Tech. It's holding ground, and that's the one that I would prefer. But coming to smaller names, I think Coforge, Persistent, these names have some more strength. So Wipro in most cases sort of is a pass. And if you want to look at, then you're looking at an HCL Tech, Coforge, and Persistent, even as a trading bet.
That's the call coming in on some of those counters in the tech pack. Wipro is what Kush is saying is probably better avoided for now. Across the other sort of trading ideas on the street, you've got metals that continue to be in a sweet spot. So that gains continue. Anything, Sony, that you are picking up? We talked about Gale and Oberoi, which were your buy picks ahead of market opening. But now the trade has opened up. Anything in the metal pack that you would still go out and acquire intraday maybe?
So I think maybe just wait for that entire space. I mean, talked about JSW Steel, which is still holding above the levels as we mentioned. I think that's the only stock to watch out for. And, maybe there's one particular stock, another that I may look would be Vedanta. However, Vedanta, if it only crosses the 510 level on intraday, then it becomes a good buy from those levels. It can test 525 odd levels. So I think I'll just wait for the Vedanta to cross the 510 resistance mark to confirm a good buy from those levels. Otherwise, I think JSW Steel would be still the stock to watch out for.
Okay, so 4 companies, 4, 5, most of them, but 4 companies whose numbers are out today. And let's just pull those up. There's RIL, HCL Tech, of course, we've been talking about, Gopal Snacks, Angel One. Angel One doing pretty decently ahead of its numbers. So HCL Tech, I talked about, RIL, Gopal Snacks and Angel One. Angel One is about 2% up in pre-open in the first bit of trade, and Gopal Snacks about 0.5% up. Kush, I want to come to you on your index call. We talked about it before markets have opened, and we're staying fairly steady above the 25,000 mark. Is there a revision in your position of what you told us in the morning, or what would you do now?
No, not really. What I would look at it as, it's playing out the way we discussed, in the sense that consolidation is the name of the game. The risk-reward ratio is not favorable until you take out the 25,200 mark, and the support comes in at 24,700. So what we discussed on Friday, same thing we discussed today morning, is that if there's any kind of pullback towards the 24,800, 850 mark, that should be considered as a buying opportunity. The index might look a little bleak around at that point in time, but from a technical standpoint, that will be the place to go out and initiate a fresh long position. Even if even if the market slips further and hits the stop loss, at least that'll be a good risk-reward ratio to consider. Not at the moment. You're looking at a 50-day moving average, and as I said, the call options are piling on open interest around the 25,000 mark. So just be a little cautious. Don't initiate fresh longs. However, if you do have long positions, then no harm continuing with those, with a stop loss at 24,700, positional stop at 24,700.
Aditya, I want to come back to you on Avenue, because we spoke about it in early moments, and it's really having a very, very rough morning. You said you are constructive on Avenue despite what you've seen with the numbers. Would you acquire right now or wait for the dust to settle?
I will believe that H2 for Avenue Supermarts will be better than H1. We've got festive season coming up in H2 as well. So I think that will be better. A stock price closer to 4,000 will be a good buying opportunity. Again, as I said, Avenue Supermart continues to be the lowest cost producer of grocery in India. Even though the hyper delivery channel is ramping up, eventually what people will really do is they will do the bulk buying from companies like Avenue Supermart, and they will do their spot buying from those hyper delivery companies. So in my opinion, this is just a speed breaker in the long-term story that Avenue Supermart really is. The company will slowly and steadily ramp up its store growth, and that's what we will see over a period of time. So any tip towards 4,000 would be an excellent buying opportunity for long-term investors. However, short-term investors will see the stock price not doing anything, at least for the next 6 to 12 months per se.
Please take it. All right. Thank you so much, Kush, Aditya and Sony for joining in today. So we're seeing markets in a muted kind of space, but holding on. Holding on, some consolidation there going on. But the big view here coming in from Sandeep Bhatia, Managing Director and Head of Equity India at Macquarie Capital. Sandeep, great to have you on NDTV Profit, and thank you so much for the time and for speaking with us today. Let's start with what we're seeing on flows, on FII outflows to be precise. And October's been brutal so far, over 56,000 crores in outflows. China is looking like an interesting story. Their initial reaction to their announcements over the weekend have been positive. Are you expecting that pain to continue in terms of foreign flows into India?
Yes, I think China will be the flavor of the month, or maybe I would say a flavor of the quarter. I think through October, December, there's definitely likelihood that China will continue to take more steps to make both its markets and its economy look better. When we had this event where the big MSCI index India weight was actually equal to or marginally higher than China, I think that was a big signal. No way that the Indian GDP, the Indian economy is less than 1/3 the size of what we have for China, but the market cap and the weighting was actually much higher for India. So that is not going to sustain. So I think the Chinese party and the government have now decided that they will boost their markets. Structurally, I don't think that changes the India story. Structurally, I don't think that puts China at a big advantage. Markets are definitely aware of this fact, but in the near term, China is the flavor.
Okay, so in the near term, China is the flavor. What pivots for India? I'm wondering then what changes this, Sandeep, and what does that near term look like? You said this month, but frankly, if the Chinese government is going to start really pushing all its weight behind improving their economy, then that change is going to be longer lasting. Is that looking a bit difficult from the Indian perspective? Because so far we've been very proud of our domestic inflows keeping everything up.
So domestic inflows, we didn't discuss. I mean, we were discussing FI inflows. Domestic inflows, I don't think change much. So that pivot, I don't think, moves away from China. Moves away from India. So domestic inflows will be definitely be strong. I think the only thing that we need to worry about is whether we continue the 7% plus GDP growth that we are on right now. So yeah, so that's it. I think valuations have been demanding. I think everyone tries to avoid by saying that India is a structural story. India's valuations are expensive, but it's fine. We will still do well, and all that's a bit of I think avoiding the issue that valuations for India are expensive and demanding. And so to that extent, there could be there's definitely I would actually welcome a bit of a correction in this market. And so this kind of a pivot to China, which FIs are doing at least, is welcome for the longer term health of the Indian market.
You're right, Sandeep. Healthy correction is what is needed in the markets. It's also Samina joining in. And I want to draw your attention to a comment that you made. You said that in the first 6 months of 2024, promoter entities of 37 companies, and of course this is data and factual, have sold significant stake in their businesses. And if they are selling stake and if they think their business is overvalued, then what are minority investors supposed to think? I want you to elaborate on that and also talk about the fact that not all promoter stake sale can be construed as a sign of valuation peaking, maybe?
Well, I don't think each and every instance can be covered in this. Sometimes a promoter stake sale may be for family arrangements and changes in family. We see that all the time in large groups. But if you have multinationals which have been present in India for long periods of time, these multinationals are now selling stakes because at some points in time, these valuations which they see are much higher than what the parent has. Or sometimes the market cap may also be higher than the parent company for the Indian businesses. I think that's definitely a signal that those businesses are overvalued. So to that extent, all these promoter sales, and it's obvious to everyone that someone who's running the business knows more about the business than someone who's just reading annual reports or someone who's reading the quarterly disclosures. So insider selling, as it said, which includes promoters, is definitely seen a big trend increase in India, and that's a sign that markets have been expensive.
Sandeep, you did allude to the fact that you feel like valuations are still expensive, even after an over 5% correction the benchmark has seen, and broader markets that have sold off even more when you look at stock-specific action recently. Does that suggest there is more selling on the cards? And what do you think the nature of this selling is going to be? Is it going to be slow and grinding, or will we have a few instances of sharp corrections in the near term?
It's impossible to exactly predict the nature of the market correction, whether it can be slow and grinding. I don't think it can be too much slow and grinding because underlying EPS momentum is still there in the corporate sector. It can be slow and grinding if you think that the EPS correction and the EPS will not come through. So to that extent, in my view, a sharp, quick correction and flows from domestics remaining strong is the way I see the markets.
Mm-hmm. Okay. Sandeep, a healthy correction is what? 5-10%? Good morning, Niraj here. And what leads this corrective move? And would you believe that you would use that corrective move to buy, or would it depend on the geopolitical situation then?
Geopolitics is a constant factor, and it will be a constant factor for the next 5+ years. In my view, I don't see any of these wars that have started in the last 2 years quickly come to a halt. So to that extent, that's the backdrop in which we have to live now. As far as what is the definition of a healthy correction, in my opinion, a good correction is a 20% correction. Now that's really more than 4 times what we have seen right now. In the near term, given the fact that India flows will be good, another 5 to 7% correction is something which is warranted by the fact that attention is seeking is going to China. I think India needs to have a period where the market comes down to a more sustainable levels, and that hopefully, if that happens quickly, that's a good outcome.
Okay, so let's see if there's a 5 to 7% corrective move. Where would you be positioning yourself in the event of such a correction, and with an assumption that it's a correction all across? It's not that it's specific one or two pockets bringing the indices lower. Let's say the index is down 5%, some pockets subsequently are down 5, 7, 8, 10% depending on how they correct. Where is it that you find favor as a house, Sandeep?
See, if there's a broad correction across the board, then that's the best outcome, because that means that the market just corrected on a macro basis. Generally, what happens is that some sectors suffer more than others, and if you are a committed equity investor, which is that even in the downturns you want to invest and you want to remain invested, then the pockets that I would look at where valuations are still decent would be the private bank sector. I think that's been a big underperforming sector. No one likes it now. But we are in a pivot in US. We are in a pivot in China and in India also. Maybe not as strong a pivot that rates can come off. So on the whole, the private bank sector, where valuations have not been high, underperformance for last 2 years has been very obvious. Would be a sector which should see better days, especially if the US continues to cut rates into the next year. So that's the way I see it. The other thing is if US growth is sustained and IT spending is sustained, then probably IT sector is one way to look at it. Some of the small and mid cap sectors are where definitely there will be much higher pressure. That's what one would see.
Sandeep, you talked about the trend of interest rate cuts continuing in the US, and private banks is something that you're looking at. What about the IT space? I mean, we're in the thick of it. We'll wait and see what more companies announce in terms of their results. We've just seen TCS so far. Do you think Indian IT will get out of this rough patch anytime soon? How are you feeling about IT?
IT will be in a rough patch for maybe till March. Depending upon how the elections come through. I think if there is a Republican victory, the assumption is there will be a quick tax cut, tax breaks given to corporates for the US that will boost spending, corporate profits and spending in IT. That could be immediate shot in the arm for IT stocks. So that's something which is expected. Other than that, at least till Feb-March, it's a bit of a grinding phase. And if this rate cut cycle is strong enough and the US economy improves, then that itself is an organic push for the IT sector.
Sandeep, about a month ago, Macquarie put out an aggressive outperform on the metals pack, 20th September to be precise. And they cited an optimistic outlook due to resilient domestic fundamentals and easing input cost as a key driver for the sector. You had stocks like JSW Steel, which were, of course, upgraded to an outperform. The sector is up about 7% since the 20th of September. Do you feel like there's still money to be made in this pack? And while the broader markets may go through a deep correction, metals could still see some uptick on back of what's happening tactically in China.
Yes, I think the China factor, as you just mentioned, is extremely important to the metal sector. The view is that China will not allow its economy to totally crumble. It's still the driver of the entire metals pack. But for a long-term investor, you have to be aware of the fact that the metal sector generally has a lot of moving parts in addition to what happens in China. It also depends on availability of raw materials and supplies, tariffs that India is imposing, and you continue to see a lot of move by India to raise tariffs from China. So that's also helping the domestic stocks. So you have to be very cognizant of the fact that the metal sector has a big China backdrop, in addition to what's tariff situation. On both these counts, India Indian firms have benefited.
Sandeep, let's shift focus to consumption for a bit. And I mean, we've seen just initial numbers from the likes of an Avenue, etc. Is consumption one area of worry as a space, or would you now differentiate between more premium discretionary consumption plays, gold, etc.? How would you feel about FMCG? Just want to get your sense on this entire space and whether you want to look at it at all.
I think you are asking a very good question. And for a very long time, everyone's trying to hope that the consumption revival happens. What I hear when I talk to businesses is the Diwali season broadly has actually done okay. In fact, some of the luxury consumption, like luxury cars, have been actually weaker than what people thought should be, because the consensus was that the luxury cars and auto will do much better, but not the staples. I think there's now some emerging weakness in autos and top-end cars. Discounts have gone up for top-end cars, so that's where we are. I would think that the way forward for the consumer sector would be to go through this October-December phase. On the staple side, valuations, in fact, despite the fact that these stocks have not had great volume growth, stocks are still very expensive. So, which is why I didn't go into recommending the entire consumer sector, because I think both in terms of valuations and in terms of volume growth, things may still be weak for the next 3 to 6 months. But on the margin, actually, I think with this festival season, things may improve for some of the staples, but the valuations will still be challenging.
So you've talked about a challenge on valuations on consumption. You've said tough times for IT till March. Apart from private banks, anything that you're liking and you're thinking that despite valuations, I know you're talking about a 20% cut. I don't know if the markets will see that at all. But anything else that you're liking apart from private banks?
Yeah, I think in this phase, where we expect at least a 5 to 7% further cut from where we are, I think it would be good to just to stay off for some more time. Always to say Rara India and India will do well regardless of anything else is good, patriotic, but may not be the best thing in terms of managing your money. So yeah, I would definitely think that a bit of stepping away and looking at underlying numbers and looking at what's happening in the rest of the world, whether it's economics or geopolitics, would be a good idea.
I just want to look ahead and talk about something which may be slightly more on the sidelines. And I want to talk about energy transition. One thing we all know that the end game is going to be a cleaner and a greener world, right? But how can investors cash in on this opportunity? Because we so often hear about these things, but when it comes to ideas that one can execute, I think investors get a little perplexed.
I completely agree with you. I think these are good talking points on TV shows, but the investability of these ideas may not be very positive. The only way I think we can play it is probably on the capital goods cycle. So whether it's ABB, Siemens, L&T, who are doing those projects, are beneficiaries rather than direct energy plays as such. So that's the way to probably look at it.
Feel like earnings will disappoint this quarter, and that could maybe beyond political and what happens outside be a trigger for a little bit of further easing coming in on the street?
Yes, definitely. And we also have important elections. We have Jharkhand, we have Maharashtra. Both these elections are important politically. And that's something which could have an impact on the way the market moves.
All right. Thank you so much, Sandeep. Always a pleasure to have you on, and we hope to chat with you soon. Maybe when some of these very, very crucial events play out, it would be great to have your view. So much happening in the next few months. But a period of quiet and consolidation for now. That's the word coming in from Sandeep Bhatia, Managing Director and Head of Equity India at Macquarie. Meanwhile, let's look at what's happening in the markets. And I just want to pull up Avenue for a second, see if there's any improvement at all. Some improvement in the markets overall. Nifty seeing a bit of a surge. Avenue still about 8% down. But I'll come to the Nifty and pull up the intraday. You are seeing some boost coming in. So the Nifty staying comfortably now above the 25,100 mark as well. Pull up the Nifty components, and apart from Wipro, what else is firing? Nifty IT doing well. Nifty Bank has seen a fair bit of a surge. Let's pull up the Nifty Bank intraday, and HDFC Bank seems to be the story of this morning, or at least for the last 10 minutes or so. Nearly 1% up on Bank Nifty, and HDFC Bank seeing a 2% rise. So you're seeing a big boost up there coming in from banks, and some strength there as well. But another stock that has been on focus is Sudarshan Chemicals. Let me pull up Sudarshan Chemicals. After its blowout run-up on Friday, the stock is seeing pressure. Agam is joining in. Agam, you're speaking with the management this morning.
Yes, I am in fact talking to Rajesh Rathi. He is the Managing Director at Sudarshan Chemicals. Mr. Rathi, good morning. Thanks so much for joining in. Of course, while we are talking about, and we do want to know about what kind of value your new acquisition can bring, let's start by taking a look at your own rationale and the thought process behind you buying this, especially knowing that we've actually seen the revenues come off over the past few years. What was the thought process behind this acquisition?
Firstly, to explain the rationale, I think Sudarshan's dream was always to become a global pigment leader, and through this acquisition, we are getting a global asset footprint, and this is a global asset footprint, right? We are buying a global chemicals player with 17 manufacturing plants and 11 countries. They have sales very healthy, not only in Europe, sir, but in Americas and Asia too, right? And a good presence across industries, which is paints, plastics, printing inks, digital inks. We are buying the deal which we are doing is the German part of it was insolvent, and the rest of the part was solvent. So the deal is a combination. We are doing an asset purchase deal for the German part, and for the other global business, it's a share deal. We are getting this business at a debt-free basis.
Sure, sir. We understand the quantities of the deal, but what does this bring to the table for Sudarshan Chemicals going forward? Again, if you could give us a better picture on revenue and profitability as well.
So we've just got into the definite, we've just completed the definitive agreements, and to get all the regulatory clearances, we expect to take 3 to 4 months. And by this, but however, during this 3 to 4 months, we're already working on a good integration plan between us. And we are confident that we will be able to, really add value to all our stakeholders through this acquisition. The business itself is today, I would say, around 3 times Sudarshan size. Yes.
And Mr. Rathi, can you also give us an idea about Sudarshan Chemicals' current global footprint and where your acquisition takes these things in terms of capacities as well as geographic reach?
So Sudarshan does have a moderate presence in several of the global markets, and as a combined entity, we would. It's a very synergistic effect. Our Heubach is strong in the coatings area. Sudarshan is very strong in the plastics area.
Mr. Rathi, I'm going to come back to the question on revenue and profitability. And, as I was mentioning, we have seen revenues come off to a certain extent, €1 billion about 2 years ago. But from there on, it has come down below that mark. And also, sir, your release does not state anything when it comes to operational profitability. So could you give us any idea of whether or not that is in the black or no?
So the revenue approximately is at about 900 million of the company we are acquiring, and it is and today the business is EBITDA positive.
All right. So looking beyond, what can you tell us about expansion plans when it comes to this acquisition?
As you know, people make the difference, and we are excited for creating a very high-performing management team based on meritocracy between the two teams, which will have good execution skills and technical competency.
So I'm sure that even more than the consideration that you're paying over the next few years for this particular acquisition, pardon me, not next few years, next few months, I'm sure that this will also entail certain investments into the acquisition in order to keep the business running, and of course your expansion plans there as well. Have you earmarked any funds specifically for these things?
So we don't see any major investments, but there will be some cash infusion required for either restructuring, some cash infusion for working capital. But we don't see any major investments coming along.
So you did briefly allude to Heubach's presence in Europe, but can you just elaborate a little bit more on that as to what that brings for Sudarshan Chemicals and the kind of value it brings?
So, as I mentioned, they have a strong presence globally in all these strategic markets, whether it's Europe, whether it's the Americas or Japan market, right? And and across industries, plastics, coatings, printing inks, and digital inks. I would say the plastics presence Sudarshan brings in a far more, a stronger area there.
And so looking beyond Heubach, are there any other inorganic opportunities that you're looking for? You've mentioned that this acquisition will be closed in the next 3 to 4 months. Are there any more such opportunities that you're keeping an eye on going forward?
In the first 3 years, our only focus is, and I think focus is very important, is going to be to create a very healthy business which is value adding for all our stakeholders. So for the first, I would say 3 years, a single point agenda, transform this business into a very healthy business.
All right, Mr. Rathi, we'll leave it at that. Thank you so much for joining us and taking us through your latest acquisition with respect to Sudarshan Chemicals and what we can expect, the kind of value it can bring. And of course, so while it's going to be a little bit of work in progress, of course, we'll continue to keep an eye on how things progress there. Well, with that, it's back to you, Niraj.
Yep. Thanks for that, Agam. An interesting morning for Sudarshan notwithstanding, which is fine, but the markets have pumped up a little bit and IT and banks are both participating, which is a great thing. So keep an eye out on all of these indices. In fact, we'll talk about all of this and more on Talking Point. On India Market Open, though, it's a wrap. Stay tuned to NDTV Profit. Thanks for tuning in to Talking Point. I'm your host, Niraj Shah. And on a good day for the markets, let's pull up the case for a chat to just establish what, amongst others, we'll be talking to our guest today. We will ask about whether high-end real estate is going to face a price correction and could that be negative for real estate companies. A Knight Frank report certainly seems to believe that there will be a correction. We'll talk about the impact of the same. Are chemicals starting to steal the spotlight? For the longest time, the last 3 years or maybe more, the chemical sector has been in a bit of a slumber. Can that change in the times to come? Are IT companies hinting at a recovery? We've heard from TCS and Tata Elxsi. We'll probably hear from HCL Tech today. It'll be interesting to see what our guest today thinks of the same. And of course, no conversation in the current times can be complete without talking about the China impact. To talk about all of that, Ashwini Agarwal, founder of Demeters Advisors LLP, joins us right now on the show. Ashwini, always good talking to you. Today is no different. Thanks for taking the time out.
How are you doing?
Very, very well, Ashwini. Thank you so much. I hope you're doing well too. But for the longest time, you've been talking about how there needs to be a return of some sanity in the markets. You could argue maybe that it's not completely that way, but certainly the last few weeks have shown that the markets need not be always a buy on dips. At times it can actually follow the sell the rise template too. We've set the cat amongst the pigeons if the pigeons were bulls.
So you're absolutely right. And I think, we are just starting to see, sanity creep back in, as you say. I don't think there's a deep correction in the offing, but I would venture to think that, we should brace for something similar to what we saw between September 21 and March 23, which was an 18-month consolidation back then, and about 15% in terms of Nifty index, if my memory serves me right. Now, this time around, it might be shorter and the number of 15% might be a little bit different. It could be 10 or 18, who knows. But I think we are set for a little bit of a consolidation. And I think there are multiple reasons. One is, which I have been talking about for the last 3 or 4 months, is the intense supply of paper. I was reading this report done about how much money has been raised in the first half of this year, and it's about 1.5 lakh crores. And this is, this doesn't include offers for sale from existing investors or promoters. This is purely QIPs plus IPO money. And this is a pretty significant number. So, even if you assume a very, very big $70 to $75 billion incremental allocation to equities from domestic households, which is direct plus indirect via insurance companies and superannuation and so on. If you put all of it together of 75 billion, this in the first 6 months of about roughly 18 billion is a pretty substantial number. In addition to that, you started to see foreign selling. People allocating away from India into presumably China. I don't know for certain, but that would appear to be the case. And then you also have valuations which are not very expensive, but bumping around the +1 standard deviation. And you have slowing earnings growth. So you put all of this together, and I think it's time to see some correction. Time correction for sure. Price correction, I'm less certain about it.
Ashwini, for the longest time, the reasons were always there. The factors were not adding up. And one of the reasons why the markets got bought on dips at all times was that while FI inflows were missing, but the DI flows were strong. We still have the DI flows looking okay, but there are FI outflows now, and which might have led to the corrective move in the recent past. My question is therefore, that what could be the factor that would lead to this correction while the reasons are there? Would it be continued FI outflows, or would it be the domestic money taking a bit of a pause?
It'll be both, Niraj. See, at the end of the day, the markets are decided by the marginal buyer or the marginal seller, right? So as the supply keeps increasing, and the supply is from new papers, the supply is from existing investors, whether it's promoters or FIIs, and it's counterbalanced by the domestic money, which has been the holding the fort on buying. So as the supply keeps increasing, at some point in time, the supply takes over. And then, we find answers as to what is the reason why the market is falling. Then we'll point to earnings growth, we'll point to the uncertainty in the Middle East, we'll point to oil prices, we'll point to all sorts of things. The reality is it's all demand and supply. Okay. And as supply keeps increasing, it makes the market, it makes it difficult for the markets to continue to go up. And at some point, the domestic investor, especially the retail participant, driven more by momentum than by anything else, he starts to wonder if he's in the right place. And that's when you see a big step down. So we haven't seen that happen yet. But we may. Who knows?
Okay. Noted. So, we might actually have some words from the Reserve Bank coming soon as well. So we'll try and get you that. But what about policy decisions, Ashwini? Are you kind of constructive there? Are you negative there? What's your sense? I mean, the RBI showed its hand, not in a rush, but is that a positive thing, or from a rate sensitive perspective, you would have hoped for some more clarity and maybe some more action?
No, so Niraj, yes, while the market was hoping for a 25 basis point cut, I don't think it was a consensus view at all. And I think there were a lot of people who expected no change. I mean, inflation is one aspect. Geopolitics is the other factor. And inflation report, even in the US, which is driving this whole narrative about lower rates, are quite mixed. I think in the domestic environment, growth continues to be reasonably okay. I think policy decisions have been fairly supportive from the government, at least, whether you talk about, what they're trying to do, trying to bolster the economy in whichever way they can. But the reality is that, a lot of things have run their course. I mean, the government can't keep spending more and more money on infrastructure on a year-on-year basis. I mean, fiscal consolidation is the right path to go. I think on the policy front, the only thing that I would hope for is a little bit easier money supply. I think the base money growth has been a little disappointing, and that's kept liquidity very tight. And there I would have expected some relief. So now with the rupee breaching the 84 mark on the US dollar, if the RBI starts buying the currency and releasing some liquidity into the market, we might see some relief there. But that too depends upon how RBI thinks about liquidity at this point in time. They've changed their stance in the policy, so that's something that I'm looking forward to. But let's see how it unfolds.
Got it. Okay, Ashwini. So let's assume that you were sitting on some bit of cash because you were admittedly talking about caution some time back. I'm presuming that from what you've told me today, you're not in a hurry to deploy. But
absolutely.
If there are some decent numbers that come out in Q2, because while the headline may look soft, but that is because of cement and oil and gas or energy. Otherwise, the other sectors may actually post in decent growth. Where is it that you are looking out for earnings performance, which might prompt you to put in some dry powder to work, even as you are maybe not as constructive on markets?
So, Niraj, I don't think there are any standout sectors where you see an incredible amount of value, barring financials. And financials have been quite undervalued relative to their own history. And even the microfinance companies have sold off quite a bit in the last 3 months. So, that's one sector that kind of stands out in terms of value relative to the rest of the market or relative to its own history. But barring that, there are really no sectoral standouts which one can point to. But I will tell you this, that on a bottom-up basis, there continue to be some ideas that get generated. Not a lot, but some for sure. And I think, given how I look at things, I typically try and look at stocks that are still haven't participated in the rally that we have seen in the last 2 years or what we've seen since COVID. I mean, since COVID, everything has participated. That would be wrong. But I think there are stocks that haven't participated in the rally of the last 2 years. And I'm looking at them and figuring out if there's an opportunity there. So it's harder and harder to find bottom-up ideas, but I do find some. And that's what I'm doing. The other place where I'm personally quite excited about is the private space, especially mature companies that might mature from an IPO perspective that might go to public over the next 2 to 3 years, I think there are opportunities available in that space. Ticket sizes are higher, so for many of your viewers, the access to those transactions may be difficult. But that's another place where I see a reasonable amount of value to put some money to work.
Okay. So, that's interesting to hear from Ashwini Agarwal that there is not too many pockets wherein there is value. Do you find value in growth, Ashwini, though, anywhere? Because, the estimates seem to suggest that EMS, for example, the growth numbers will be solid. But somebody was cautioning me on Friday that if you just look at the cash flow converted EBITDA to CFO, those statistics are abysmal for a bunch of these EMS companies. I'm just trying to understand, how do you think of that bucket, considering that the reported growth will look okay?
So, I'm a big slave of cash flows. So, growth without cash flows is not something that appeals to me unless you're in very early stage of a very long growth cycle. So EMS obviously makes the cut in the sense that, it might be a 10, 15-year growth story or 20-year growth story, but the valuations still don't appeal to me. So unfortunately, I'm not invested there. In hindsight, obviously, one wishes that one had. But I'm a value investor. I'm an old-fashioned guy, so it's okay. I'll partake of something else in the 1,000 dish buffet that we are at.
Okay. And viewers, it's interesting because sometimes when you buy into overvalued stocks, and I'm not saying that this stock was overvalued, but it certainly is rich in valuations, and there has been a bit of a disappointment today, as a result of which Avenue Supermarts is bearing the brunt of some serious selling pressure. Now, before I ask Ashwini Agarwal about his view on maybe retail, there's a clutch of names out there which are doing really well. Let me get in my colleague Mahima, who joins in with telling us as to what Avenue Supermarts did and what is it that the sell-side view is on the stock, considering that it's been bludgeoned out of shape in trade today. Mahima, good morning.
Good morning, Niraj. So basically, revenue Q2 numbers were a complete miss in terms of estimates. And in terms of margins have taken a hit from 8% to 7.6%. And what was the highlight was that the management has said that now they're seeing, their business being impacted on account of online grocery new formats. So it's the quick commerce that is kind of affecting their like-for-like growth. Now, multiple brokerages have come out with their view on Avenue Supermarts, and the views are mixed, of course. To start with, Citi and MS, who have remained underweight as well, have given sell ratings. Well, they're the most bearish ones. Citi has maintained sell with a target price of 3,500, and what they've said is that EBITDA and profit before tax growth has lagged revenue growth in 7 out of past 8 quarters, and they've also trimmed their EPS estimates by 4 to 6% for FY 25 to 27 estimates. And valuation as risk to reward seems unfavorable at 82 times. Now, MS has downgraded it to underweight with a target price of 3,702, and what they're saying is that online and offline can coexist, but defenders cannot stay defensive. Now, this was the highlight of the report, and they've lowered the top line growth estimates by 7 to 18%. Now, Motilal Oswal has reiterated buy rating and given a target price of 5,300, and they're estimating a CAGR of 17% and 20% respectively on revenue and PAT over FY 24 to 27, and they've cut estimates of EPS by 8 to 14%. Now, Nuvama retains hold with a revised target price of 5,040. What they're saying is that DMart Ready's growth slowed at 22% YOY versus that of 32% in FY 24. Bernstein has the highest target price at 5,800 with outperform rating. What they're saying is that one quarter results does not indicate a shift in DMart's long-term story, and they believe value-seeking customers will remain primary purchase driver for the large part of India. CLSA on Avenue Supermarts, well, again, they've rated it outperform with a target price of 5,650. What they're saying is that they believe DMart is making appropriate pivot to private labels, and this will meet future growth for the company. And lastly, Macquarie has rated it outperform with a target price of 5,600, and they're saying this Q2 is a miss and commerce concerns are cited by the management. So this is the overall view of how Q2 numbers have panned out for Avenue Supermarts, as well as what sell-side brokerages are saying about Avenue Supermarts.
Comprehensive indeed. And Ashwini, I'd like to come to you on this. Now, one swallow does not a summer make, but certainly lays out the perils of investing in a high-growth business wherein a quarter of growth gone, and maybe Avenue Supermarts will bounce back. It's a fabulous business run by a fabulous guy. But for somebody who's tactically got in, is really licking his wounds or her wounds because of the high valuations and now the inability to show growth for a couple of quarters now?
So, Niraj, this is my whole reason why I, hate or why I dislike investing in stocks that have very high multiples, whether it's price to sales, price to book, price to earnings, EV to EBITDA, whatever you look at. Principally being that the room for disappointment is very low. And I tend to kind of go where value is, so your downside is protected, hopefully. And you make a lot of money if you're proven right and the business is doing better than what the street thinks. So it's always about betting on what your view is versus the street's view when you're doing bottom-up stock picking. And this is clearly a situation where expectations were not met, valuations were rich, and that's why you're seeing the pain today. So we don't know what happens in the long run. But the other point I'd like to make on consumption is that I'm continuing to see very mixed trends in consumption. I mean, the K-shaped, much talked about the K-shaped recovery that we saw post-COVID continues to have legs with stronger demand for more expensive luxury products and kind of weaker aggregate demand for bottom of the pyramid products. I think two-wheelers is an exception. But outside of that, I'm not seeing a lot of traction for demand. And that's quite puzzling, actually, because I had thought that election spending will provide some boost to rural demand. Monsoons have been very good. Inflation is reasonably well behaved. So I don't understand it. And this has been bothering me a little bit, and I don't have an answer.
One of the things that was noted, though, Ashwini, is that quick commerce growth is continuing unabated, even if organized retail might be facing in select pockets a problem or two. Trend is not showing any such problems. Some of the others might be, and that's another stock with such massive multiples. But of course, the growth is there. But here's my question. Therefore, while there are some puzzling things there, is quick commerce still a pocket to look at seriously, simply because the growth numbers are looking very, very strong for both the listed and the unlisted ones?
Absolutely. So you're right. Partly the problem in the consumer retailing has been the disruption caused by quick commerce, and quick commerce is here to stay. I mean, all of us are getting used to ordering on the Blinkits of the world. I mean, who doesn't like a 15-minute delivery? And I think it's here to stay, and it'll probably gather momentum. Let's see how this unfolds, and there is a path to profitability that some of the people in the private space need to find. But so for now, the growth is so good that funding the losses is not going to be a problem. And for the moment, this market share shift from modern retail to quick commerce, or from traditional kirana to quick commerce, will continue. I don't think there's any way out. I mean, I think this is a reality.
Wow. Okay. So select names bankable in the quick commerce space, Ashwini. I'm just trying to derive the final answer here.
Could be.
Could be.
Valuations are expensive, but you could get to eat the growth. I don't think you will get to see multiple expansions, but you could get to eat the growth, and growth's going to be pretty good.
Got it. Now, you talking about different pockets, let's say, or sticking partly to consumption, in the midst of presumably a long cycle, which is Indian real estate. I read a report from Knight Frank over the weekend that high-end real estate prices might be set to correct. It doesn't show in the demand numbers that are happening across various companies which are launching projects, NCR, Mumbai, where have you. Trying to think about how you are thinking about this pocket, because you were an early investor, I know, into some of the NCR companies, maybe MMR too, I don't know, but certainly NCR. What is your view on the attractiveness or the lack of it of real estate companies now that there has been a bit of a rally into some of them?
So, interesting question, and I've kind of been puzzled by it as well, that how many people are there in India who can afford to buy homes that cost, $5 million or more. And it's incredible, some of the prices for new offerings that are being charged. There could be some consolidation available, possible. But also there is a very high correlation between stock markets doing well and real estate doing well. And if you go back to the argument that, look, you're not in for a very deep correction. You're probably in for some time correction and probably single digit, high single or low double digit correction in terms of prices. Then I think the tailwind that many people who have been invested in the markets for a while have in their personal fortunes will continue, and therefore their ability to pony up for homes. If you recall our initial conversation, I'd said that a good home is a basic and is a basic human need, and something that is the first port of call for saving. So when you look at people who make a substantial amount of money through a private company being listed or through options of having worked in a startup, I mean, it's natural to expect that they will go and buy themselves a good home. So I think the underlying demand trends will continue. Maybe you won't see the price appreciation that you have seen in the last 2 or 3 years. I mean, that's how I think about it intuitively. I don't see a massive sell-off happening in real estate, something akin to what we saw in 96 to 2003, or something that we saw from 2011 to 2020. And the reason is we are not seeing higher rates. We are not seeing higher interest rates. We are not seeing a massive amount of bubble in some other part of the economy which needs to be deflated. I mean, historically, real estate falls have been accompanied by a downturn in the economy, and I don't see that happening.
Okay, you don't see that. Okay, so therefore, suffice to say that, Ashwini, you're not negative on real estate thus far. And viewers, there are enough reasons. I think our producer showed the chart of how real estate inventory as well is essentially not very high in the system per se, and therefore that could also be a big thing to monitor. Ashwini, the other point is chemicals. And from the last 12 months, I've been listening to the possibility of good times because the sector was consolidating for such a long time. But the China pressure is here and real. Dumping is still on in select pockets, as promoters tell us as well. I'd love to know how you are thinking about this bucket, because sporadically we see these, like the Sudarshan Chemical announcement or the acquisition, etc. An announcement here and an announcement there. Capacities are coming in. The stocks aren't quite moving. They're not showing results as well.
I think you have to be a little more longer term in your view and look at the positioning of a company in its space. Where is it adding value? What is it doing? And what do you expect 3 to 5 years from now? So what I would say is that the way I think about China is that from a top-down perspective, what China wants to do is more in terms of new technology, innovation, value addition. They're really not interested in supplying bulk chemicals to the rest of the world. I think some of the pressure will continue in the short run because they have capacities and the capacities will keep churning out. So that might happen. But in the longer run, that will not hold true. And what the Indian companies have done is occupied niches where they can add value through domestic chemistry skills, ability to manufacture quality product at a lower price than the West can. And this whole China plus one narrative has allowed people to come and look at India a little more closely. So I think there is an opportunity there. You have to be very bottom up. We have to be very stock selective. But I'm quite constructive on this space, actually. I think there's a lot of value that will be generated in the years to come. It may not happen across the board. It might be very selective, but I think it will happen. Also, what you will see is margin normalization happen because, you went through 2 or 3 very tumultuous years post-COVID where initially end product prices ran up and abnormal profits were made by domestic chemical manufacturers because they had low-cost raw material inventory. And then raw material prices went up and product prices crashed and you had a shipping crisis. So, you had this massive yo-yo in margins where you had abnormally high margins and then abnormally depressed margins. And I think now the margins are coming around to what they are sustainable. So now you will start to see growth from projects become visible in earnings. So I'm actually quite positive.
Mm-hmm. Okay. Ashwini Agarwal, on that note, we'll call it a day today. But thank you so much for taking the time out and being with us. And from all of us, wishing you a great festive season. Hopefully talk to you around the Diwali times.
Thank you, Niraj. Wishing all your viewers and all of you at the channel the same.
Thank you so much. Well, must mark some stocks though. Hubac Colorants is down and out in the session today, as is Tata Chemicals. And I don't know if Tata Chemicals, the reason being the to and fro around the listing of Tata Sons and the possibility that what if it doesn't? Because remember, Tata Chemicals is a large stake in Tata Sons, and that stock is down 4.5% today. So bear that in mind. Actually, just pull up DCW and Epigral also and just see if those stocks are down, because one of the reasons why some of the stocks may have also gone up because of the caustic soda prices, but no, it's only Tata Chemicals individually. So bear that in mind. And stocks like Bandhan Bank and Avenue Supermarts and Neogen Chemicals are also looking slightly weak. But with that, it's a wrap on this leg of Talking Point. Thanks so much for tuning in.
Week starts on a positive note. Nifty trades about 25,100. Wipro, L&T, Coal India gained top gainers on the index, while Maruti, Ultratech fall behind. Most sectors in the green, with real estate and finance leading the gains. Meanwhile, media, pharma and healthcare take a backseat. Media slips over 1%. And Avenue Supermart cracks 7% despite seeing a revenue growth of 14%. Slow growth in store additions and competition from quick commerce players continues to weigh on DMart's performance. And Hyundai IPO to start taking orders for its $3.3 billion IPO. The deal can be the country's largest ever share offering and world's second biggest IPO this year. You're watching the FNO show, and the markets, after a week of nothingness, are trying to find their base. 25,100 on the index is what we have. The breadth looking okay as well, with a clear bias on the upside this morning. But we're only the start of the week, Agam, and we've seen all through the last trading week gap ups get sold into in the second half of trade. This morning looks steady for now, but what is it looking like on the FNO space?
So, Samina, a lot of people are suggesting that from here on it's going to be a bottom-up market. It's going to be about stocks more than indices. For now, of course, well, consolidation continues. It's evident in the data because 25